All right. All right. Okay. All right, you guys. Well, I feel like I've got to change this up a bit. So I'm going to try not to talk about anything negative at all. We'll see how far I get. Let's see how far I get. Ciao. Ciao, Bella. Ciao, Bella. All right, so RLAIF is bidding 28 cents. Bidding. When's the last time you saw that? The volume's low. The volume's low, but it's a nice bid. My eyesight, I'm sorry. I think I'm going to have to go somewhere. Maybe I just have to get glasses. But my eyesight's not particularly good for reading anymore. So I apologize in advance for any mistakes. NIX, 178 to 180. The volume is, pretty solid. G-Bucks is down 24 cents, 25 cents really, 380. So they're fighting there. We'll find out. Now, finger motion is up quite a bit. I'm not getting a quote. Here it is. The bid is 136, the ask 137. The volume 424,000. So last trade 136.5 on finger motion. And the other day I had something to share with you. I don't know if it's here though. I'll find something to go over, but I really had something I wanted to talk about. And then I got frustrated and left in a huff. See what this says. My eyesight is terrible. All right, that's a it's too hard to read. All right, I'll skip that one. All right, I did want to show you, just for fun. The problem is I've only got one of these. Nancy Pelosi. Let me see what this one says. Adam Schiff. I want to show you that the patriarchy is still in force. Look, Adam Schiff has a net worth of 60 million. Mark Warner started with more money when he came in. He had telecommunications, but he's worth 215 million. Mitch McConnell, who came in poor, but he's leaving worth 95 million. His wife was appointed Secretary of Transportation twice, and their wealth comes from transportation in China. Michael McCall, net worth 200 million. Mitt Romney, 300 million. Of course, he started with that fund. Cory Booker, 14 million. All right, he's lagging, but he's just started. Hakeem Jeffries already worth 17 million. Kevin Hearn, 361 million. These men, just look at what they're making. And then when you compare it to the women, it's just not fair. The patriarchy is just not fair. Look at AOC. She's only at 29 million. This guy, Jamie, is at 20. Yasmin Crockett, how can that be fair? She's only got 10 million. I'm telling you, the patriarchy is alive. Elizabeth Warren, I guess because she's older, somehow she went from her background to be worth 75 million. Ilhan Omar, wow, that's pretty good. Chucky Wucky, he's pretty good. And then Nancy, of course, is the grandmother of all godfathers. But wow, really unfair to the women in Congress, this patriarchy. And then you've got this brilliant one. You've got this brilliant. Here's a woman who got a good education. She worked for the government. And she's worth $30 million. But you'll notice that's lower than any of the men in Congress. The patriarchy keeps women down, I'm telling you. Keeps them down. All right. I want to show you this, and I don't really want to spend a lot of time on MMTLP today. But this is the Congressional Research Service. I'm sure a lot of you have seen this. I'm seeing about 3 lines where one line is. But this is dated August 21, 2023. During the fourth quarter of 22, abnormal trading in MMTLP attracted the attention of capital market observers. MMTLP was the OTC stock trading symbol for non-voting Series A preferred shares of metamaterial. That's not completely, I guess it's accurate, but all right. A small nanotechnology and materials company. It got a lot smaller. Since MMTLP's trading halt in December 22, investors who suffered financial losses have sent more than 40,000 letters generated through automatic letter wizards in some cases to Congress to voice concern. This insight explains meme stocks gain popularity through social media. The share prices often decouple from their perceived. Hello?
Hello. Hey, Bill.
How are you doing?
How are you doing? Are you live?
Yeah, I'm live. Let me just finish 2 sentences and then.
Yeah, I'm just gonna I gotta take an elevator 1 floor, so just give me 1 minute, all right?
I'll pick a better time to answer the phone. The market volatility related to GameStop is one example of meme stock trading that heightened policy debates. MMTLP's trading prices rose rapidly from less than $2 to around $12 by November. Like the GameStop event, the price appreciation was fueled by social media discussions, despite research analysts' belief that MMTLP shares were worthless. They don't give a backup for that. So the last bit here, meme stocks gain popularity through social media. Their share prices often decouple from their perceived fundamental financial performance and income capabilities. the market volatility related to GameStop is one example. And so I guess I already read that, but maybe they're repeating it. Meme stock trading that heightened debates. MMTLP's trading price rose rapidly. Like the GameStop event, the price appreciation was fueled by social media. Congressional Research Service in 23. Anyway, I just wanted to read that to you guys. It's going to be a tough battle getting MMTLP story across to Congress. The lobbyists have already been in there. All right. So Ham can now start talking to you.
All right, I just took a steam, so I'm a little better.
You did a Schwartz?
But yep.
That's how I do it when I go.
It's just my voice. I feel good. It's just my voice. Anyway, listen. No one has the right to play God in the stock market. I don't need a politician to tell me it's overvalued. There's many stocks overvalued. Where are they speaking about those when they explode like a Netflix or whatever? They never say anything. It's none of their business. It's about stock settlement. For all you idiots that get dragged into that, you're stupid. The fight is stock settlement. Don't let them drag you about fundamentals. They're looking for a way out. Don't go for it. All right. I'm going to move quickly, William, because I feel like I'm losing again. So, finger motion. I got my third confirmation that fund out of Singapore is buying the stock. People, this is how they buy it. They need to buy stock. They're not here to move it up for you. So don't think that they're going to come here, take it from here to there on 100,000 shares so you can get rich. They're trying to bait the shorts at selling it to them. And I think the shorts know they're here. The stock tells me they know. Because the stock has a different look. They used to beat it down. They're afraid to beat it down now. All right? They used to beat it down all the time. Now they're not doing it. For what reason? All of a sudden they want better prices? Doesn't make any sense. They know this. They know they put the buys around the street. The street is small, and they all talk. When does it go? It goes when they decide to go. But they're here. Who loves that? Hold on a second. So that's what's going on there. GBUX, I spoke about. ACS, ASCM is still playing games. But you know what? In the end, there's buyers here. They'll take it up on the close. That stock is all about marking it up or down on the close. That's it. So, do you have any questions, William? Because I can't talk that much.
I guess looking for a big spike in finger or the dividend. I guess that's a question on the dividend.
Don't tell that gentleman look for the dividend. I'm looking for the spike.
Okay. Well, she said both. Is NASDAQ canceling high frequency trading? Or did they?
They must have their own platform, I think. I'm not sure if that's for everybody or for them.
Okay. I didn't know that. I guess I'm out of the loop. I don't see any particular questions. No.
The story is stock settlement. Not payment for order flow, not high frequency trading. It's all bullshit. Stock settlement. That's it. MMTLP, just demand to count up the longs. That's it. Don't fight them on any. Don't give them any. By fighting them, you're giving them other avenues to skip out the back door. Add up the longs. That's it.
Well,
Doesn't
one
make a
way to
difference
do
when you
that's to transfer for your shares. But anyway, I can't win on that. Rash wants to know your opinion of XRP because you can add so much value there.
I have zero value.
That's it. There aren't any question that one guy, Benjamin Shmuel is asking why the company is not buying the shares now. I don't know what that means, but that's the only real question you have up there.
I have no idea what that means. No idea what that means.
Yeah, so there's not much there. The stock is trading pretty well today. It's up to $1.36.
I think the fund is going to use the $1.40 top. See what they do there, right? Because that's where they defended it last time, right? That's $1.40, William, right?
Yeah, I remember that, but not as well as you do.
Right.
I don't
know. Went to $1.40 and they knocked it down. So I think they defend that. And then once it breaks through there, the next spot should be $1.60 to $2.
And that tells you that you need tea with lemon and honey.
Oh, no, I can't drink it anymore. I'm sick of drinking it.
I think a steam is a great idea, but
I did.
You already did that.
You don't want to be in the steam room with 10 other people, so I try to do it in the middle of the day. So I don't want to get anybody sick.
So I'm looking at my eyesight has just gone downhill. That's disappointing to me, but it looks like finger is 136.5 is what it looks like. Yeah, 136.
William, I just want to talk about root for a second again.
All right.
This morning it spiked to 146, dropped down to 134, I think it was, and then turned again. I don't know where it is now. I think I saw it at 140 again. I can't remember. That's how shorts cover. Just watch that stock. I keep telling you. And it's 141 now. It's a tough stock to trade. But if you get the groove on it, you can see the shorts. They spike it up, let it drop, come back and get it. That's a fund trying to cover. That'll be the same pattern in finger motion of the fund trying to buy. Spike it up, let it drop in, spike it up, let it suck in the buyers. That sellers, and I think the short sellers know that someone's doing that. You can see that they're standing there, but not really attacking.
You should drink fresh ginger root. Boil it for 10 minutes.
My wife gave me oil or oregano or something like that. Oregano. Oh, is that nasty? Oh.
You could always try a Magnum 45. No, just kidding. So Steve wants to know, what would the January 2026 $10 calls trade for if the move happens? I don't think you have to be that cute myself, just buy the stock. But anyway, I'll let Ham answer it.
What would the 10 calls be worth?
10 calls January 26th. A year from now.
What are they worth now?
I have no idea. It's out of my ken. But you're right. I wouldn't buy them today with the stock up, but the next time the stock has a pullback, you might be able to get something like that for junk prices, and maybe it's worth the gamble. I don't know. 15 cents is what they're trading for.
All right, I would buy the ones for a nickel in April or May, whatever.
Yeah. Whiskey. You should have whiskey and lemon juice and honey.
There's no way I could drink whiskey. I'm not a whiskey drinker. I can't even. I think I drank it once, and I never touched it again.
I've got to be careful because last night I went to this great outdoor place by myself. It was fun. The music and food was good. And he asked me if I wanted to drink. If I were younger, I would have said yes, but I controlled myself. Yeah, there's no other questions. So
That's it. I don't know what to say. I'm telling you, you're looking at a sign of a fund trying to buy the stock. Excuse me.
Darren says you need oregano oil soft gels. Take twice a day. It'll clear
That's what
you
I'm
up.
taking that. Yeah, I'm taking that. Yeah.
Oregano.
Anything else? We're all
The
good.
$1 calls for April are 35 cents. Now you're talking something that I would look at. Ham probably wouldn't because you're spending too much money, but that's
I'm a garbage player.
I'm more of a wuss. But I've lost money in it. So why don't you
I'm
go?
gonna go try all those remedies and see. I'll be drunk with tea, whiskey, and oil of oregano.
I think you should open your pool, jump in it, and hold your breath for 10 minutes.
I'll speak to you later.
All right, bye. Well, that was ham. That wasn't much. Look, I guess if you're buying calls that go out a year, maybe it's worth buying them at 10, but I don't think I've got to be careful because Ham's hearing information or he's relaying information that he has heard. But I still would you don't need to race in, you don't have to overpay, I don't think. I think you have some time to build your position. But who knows? They move when you don't expect them. And there is some strength in that chart. But I don't know. I'd rather sell those $10 calls or sell closer in $10 calls. Trying to think. Oh, I know what I was gonna. It's up here though. It's not here. It's up there. Maybe I can find it. It's a different subject though. You guys just want to talk about XRP and Pfizer. I don't know why you would want to buy Pfizer. They're killing most of their customers, but maybe you don't agree with me on that. See, I haven't read this article in full, but these are things that I think, one, are interesting. Two, I think everybody should be aware of as we vote. And there's money to be made. And it's a good place to put your assets, I think, if you're investing for the longer term. But my opinion, and again, who cares about my opinion? I don't know why we flared in the first oil rush 100 years ago or so. We flared our natural gas in Wyoming and Kansas, just like they're flaring it around the world. Natural gas is valuable, and now we're shipping it off. We're selling it, and if I were the Communist Party of America with the capitalists down below like China, I'd say we're not sending that anywhere. We're going to keep it in North America so that our population can have hot showers and they can dry their clothes in dryers and They can, which I think is a luxury we should change, and they can have electricity. But anyway, all right, I'm going to read. This is a guy, Art Berman, who's been wrong, but he's very good. He's out of Dallas. Draining America First, the beginning of the end for shale gas. And one of the big reasons why the number shows 21 or 22 million barrels a day of production is shale gas. It's oil equivalent. The United States is the biggest producer of natural gas in the world and recently became the largest exporter of LNG. Like I say, I'd rather import it from Qatar or Russia and save ours for later. This couldn't come at a worse time. Instead of having an almost infinite amount of natural gas, as many believe, we may be witnessing hard limits to natural gas supply. Shale gas plays have reached an apparent peak and may be starting to decline. It's not a good sign, although some of this may be related to seasonal effects. At the very least, the rate of production growth is slowing. Any decrease in the growth of shale gas could become an acute problem because it accounts for 82% of the United States dry gas production. I can tell you're scintillated by this. And then Art Berman says, look, I'm not that concerned over the next the next few months to a year. He is concerned about 5 years from now, 10 years from now. That's what I agree. This concern is based on plans for increased LNG and pipeline export. I'm not going to read those numbers because it'll overwhelm you. Let's take, not that you could handle it, but you'd get bored. Let's take a quick look at production from the three biggest pure shale plays. The Marcellus play in Pennsylvania and West Virginia is currently producing about 26 billion cubic feet a day, but output appears to have stopped growing despite plenty of new wells being added every month. 26 billion cubic feet, so a lot of cubic feet. Production from the Utica Shale play in Ohio, mainly, has fallen from 7.7 billion cubic feet 5 years ago to 3.7 billion cubic feet now. It seems to be in terminal decline. The Haynesville Shale in Louisiana, basically, is producing about 15 billion cubic feet a day. Output may have stopped increasing despite adding more producing wells each month. This could just be temporary, but that's what the data shows right now. Because of this uncertainty, I decided to look a little deeper at the play. What I found is disturbing. Haynesville Shale production rates for the 2 years of 21 through 23, horizontal wells, the wells that were drilled then, the horizontal wells, are already lower than for wells. Let me start that over again. My eyes adored you. Haynesville Shale production rates for 2021 through 2023 horizontal wells are already lower than for wells with first production in the 2018-2020 period. Initial rates for 22 wells were the highest ever, but monthly output levels are already far below all other years. Initial rates for 23 were lower than for the previous year, and the rates have declined more rapidly. Estimated ultimate recoveries for the Haynesville Shale confirm the bleak picture. I'll skip those numbers, just focus on that sentence. Shale gas plays are beginning to look like a graveyard. The once world-class Barnett and Fayetteville are no longer included in discussions of U.S. shale plays. The Utica looks like it's headed for the same zombie status. This study suggests that expectations for future U.S. shale gas production may be too high and that reserves may be overstated. I think that's probably true. But a lot of my friends, they look at me and wonder if I have two heads. Plans to increase exports by 15 billion cubic feet a day. Exports will put serious pressure on future supply, regardless of whether or not production has started to decline. And this is what I think. I don't know why you would let your politicians or your companies ship this out of the country. Once it's gone, it's gone. Why wouldn't we keep it here for your grandchildren? I don't know. I noted in a recent post that signals are flashing yellow, if not red, about the future of tight oil production. It now seems there are similar danger signs for shale gas plays. Draining America first. And that, my friends, was the article. That was the article. In January, he wrote, and it's not very long, Art Berman, January 4th, 2024, beginning of the end for the Permian. The Permian Basin is what caused the United States, I mean, there were other shale plays, but this is what caused the United States head-to-head battle with Saudi production on the cover of all the magazines and cartoons and opinion pages a few years back. But the Permian is, there were a couple of things. One is they started drilling horizontally, sure, but they also drilled vertically through all these zones, and they were allowed, for the first time, the Railroad Commission allowed production from all zones. It used to, they would have limits. And so it's just a matter of sucking it out more quickly, not really finding more oil. Anyway, the Permian's extra on the margin oil production is one of the reasons the world's prices have kept down, and the world thinks there's plenty of oil. Anyway, the beginning of the end for the Permian, written 2 months ago. This article's 2 months old. Permian Basin and Eagle Ford oil recoveries have both fallen by 30%. Now, I will say with statistics, there was a period where some of the drilling slowed down, so that could be it, but I don't, let's see what he's smarter than I am. Permian Basin and Eagle Ford oil recoveries have both fallen by 30%, and the Bakken has declined by almost 20%. Those plays accounted for two-thirds of U.S. output in 23. So the Permian, the Eagle Ford, and the Bakken accounted for two-thirds of United States oil output in 23. That means that U.S. production will decline at some time in the relatively near future. And I hate to disagree with Donald Trump, but this is just the reality of nature. This is the reality of oil and gas. You can't just say we're sitting on more oil than the rest of the world and declare make it so. There's a certain, I guess you would call it physics to what's underground. But wait, isn't the United States producing a record amount of oil? Yes, U.S. output increased by more than 1 million barrels per day in 2023 to 13.2 million barrels a day. That's why I got so confused when I was reading that report to you when they said we're producing 22 million barrels a day. That's the number I remember, 13. But anyway, U.S. output increased by more than 1 million barrels per day in 23 to 13.2 million barrels a day. And about 80% of that increase was from tight oil plays. How can well performance be decreasing whilst production is increasing? The answer is that shale wells are producing at higher IPs, higher initial rates, but are declining faster than in previous years. They're sucking it out more quickly. Their total recoveries are lower than just a few years ago. Also, it can be that they're drilling tier 2 wells. Total recoveries are lower than just a few years ago. The wells are burning out. Oil supply, like life, is a marathon, not a sprint. The plays have been over-drilled and wells are interfering with each other. They are cannibalizing production from wells next to each other. The Permian Basin Texas, accounted for 46% of United States domestic supply. That all those acres that Biden shut down, which I disagreed with, that will not change the fact that 46% of U.S. domestic supply came from one of the greatest fields in the history of the earth, and we just decided to suck it out more quickly. The Permian Basin accounted for 46% of U.S. domestic supply in 23. Other tight oil plays were responsible for 22%. Conventional and offshore production, conventional oil and offshore production accounted for only 32%, and that number hasn't increased for 15 years. This makes it pretty clear that if shale production decreases, U.S. production decreases. The conventional base is only about 4 million barrels a day. So in other words, oil from conventional sources, it's only about 4 million barrels a day. So that is the level toward which U.S. output will trend. I mean, it's pretty scary. I mean, you guys can talk about day trading, and I can talk about RLAIF, but the fact is in the background, the miracle of U.S. oil production I'd say definitely will trend from 13 million barrels a day down to 4 or 5. I mean, sure, there might be technology that does something. Anyway, the Permian, Eagle Ford, and Bakken plays accounted for 93%. The Permian, Eagle Ford, and Bakken accounted for 93% of tight oil production in 2023. So this article focuses on the Permian, but well performance in the Bakken and the Eagle Ford plays follow a similar pattern of deterioration over the last several years. The Eagle Ford, I'm sure you know, is in Texas, and the Bakken is up in Nebraska, basically, in Canada slightly. There are two important approaches to evaluating well performance. The first is a comparative rate versus time plot, in which monthly production is normalized by year of first production and plotted on a linear scale. Isn't that clear? This is a quick look technique. It is useful to compare monthly production rates from different years, but this should not be used to make assumptions about how much oil can be recovered. So he does a chart and he says his conclusions are that initial production rates for 22 and 23 are lower than 21, but are still higher than previous years. His second observation is recent month production rates for 22 and 23 wells are already lower. These are both bad signs for the future of Permian well rates. In other words, these are IPing at lower rates, and then their decline is faster. But he's saying this can't tell you how much the ultimate recovery will be. So in order to determine how much each well might produce, a second technique is needed, creating a type curve, log rate. I'm going to skip reading all that to you. Unless you want to hear about Fetkovich plots. Fetkovich plots. It might keep you tuned in. All right, the average horizontal Permian well has an EUR of 428,000 barrels of oil and 2.2 billion cubic feet of gas. That's over the lifetime. Almost 60% of that has already been produced. The results of decline curve analysis for the Permian horizontal wells since 2018 indicate that the average estimated ultimate recovery has decreased 29% from 21 to 22. And then if you take it from 21 to 23, it's decreased 38%. So new wells drilled, the estimated ultimate recovery is 40% lower than wells drilled just 2 years ago. He uses, that's interesting, a 10-to-1 conversion of natural gas. Okay, he puts a bunch of data there I'm not going to bore you with. I already told you that. So this decline, which might be closer to 26% in the estimated ultimate recovery per well than the 35% right now, you know, he doesn't know. He said even if it's that number, it is both significant and alarming considering that the Permian production accounts for nearly half of U.S. domestic oil supply. Drilling is profitable at current prices. That's good. So development drilling is continuing at about 5,000 wells per year. And this is what's happening in Saudi Arabia. They're drilling a lot of more wells. So this drilling all these wells should result in continued deterioration. I don't know why I can't say that, of well performance, because the most probable explanation is that the plays have been over drilled. It could also be they just went for the good part first. Here's a picture of how the wells are spaced. When you're doing horizontal wells, you can see they communicate with each other and they drain everything. It's like a bunch of kids putting straws in the same milkshake. The problem is that when wells are too closely spaced, their reservoir drainage radiuses, radii, overlap and wells cannibalize each other's production. And if you're cannibalizing a competitor's production, if you're Exxon and Chevron's next door, you're going to suck it out more quickly because you want to get as much as you can. You don't want to give it to Chevron. Just like little kids sucking on a strawberry milkshake. Optimum well spacing is a complex reservoir engineering problem. So other reasons why the ultimate recovery numbers might be going down is poorer reservoir quality. They drilled the best ones first. Less effective completion and fracking practices. I'm not so sure about that. And declining reservoir pressure. That could be. So he's not going to talk about any of those. So the business and finance headline of Wall Street 2024, the Wall Street Journal, first edition, the year 2024. The headline in the business section was, quote, "Shale is keeping the world awash with oil as conflicts abound." Shippers in November moved more oil out of the United States than was produced in Iraq, OPEC's second largest member, at a record of 4.5 million barrels a day. Remember something about Iraq. Iraq probably has the world's last remaining massive conventional oil resource, even with all the destruction that Saddam caused. Anyway, they're producing 4.5 million barrels a day. 2/3 of U.S. production is poised to decline during this decade, but the United States exported more than 1.5 million barrels in 2023. Why are we doing this? Why? That's what I wish Trump would realize. Let's not export any of this crap. Let's keep it. Anyway, so we exported 1.5 billion barrels in 2023. That's 1.5 times the amount exported from 1920 through 1950, when the United States was by far the world's top oil producer, averaging 82% of the world's output. Do you think there's a reason Economists tell you it's our system, and politicians says it's democracy, and the dollar bill says it's God. But can you see a possible reason why the United States won 2 world wars and became the economic engine of the world and became the wealthiest per capita country in history? Is there another explanation beyond democracy and free markets? The United States was by far the world's top oil producing, averaging 82% of total world output in the period from 1920 through 1950. That's because until 1973, there was a proration policy to limit production and exports in order to maintain spare capacity for war. And now we're just, this is the one issue I have with Trump and Maggie Thatcher. I don't think we should be throwing a party. I think we should be saving our bounty both for recreating how we live. In other words, live in cities, live in towns, and get rid of all the gas guzzling highways, except for trucks and long distance travel, like you want to go see your grandma, but maybe have trains for most people. I'm not saying take it all away, but if we all live, it's going to come a time you can't afford these highways. Anyway, what are we thinking? The United States is now following a policy of draining America first. It's insanity. I haven't read this before, but he's got a graph here of the Drain America First hockey stick. U.S. crude oil exports averaged 91,000 barrels a day from 1920 through 2016. 2023 exports averaged 4.2 million barrels a day. Now, I can tell you why some of that's happening. When they started producing the Permian, they produced sweet, to be simplistic, sweet crude oil. We don't have the refineries for that. So that's partly why we export it, because we can't refine it here. It might also be that we didn't build the Keystone pipeline, although that brought oil in. But it's that other pipeline that got canceled that might be a reason too. So the Permian is in Texas, and you just ship it out of Houston. But anyway, do you hear that? For a century, we averaged exports of 91,000 barrels of oil a day. And then in 2023, we exported 4.2 million barrels a day. Do you think we're ever going to want that oil back? I think it's insanity. And while we worry about, whether or not Snow White is going to smash records, which it won't, why are we doing this? Anyway, the latest U.S. projection indicates that the United States will produce as much crude oil and condensate in 2050 as it did in 2023. I haven't read this, but I can guarantee what's coming next. There ain't no way, Jose. So the United States Energy and Information Administration projects that the United States will produce as much crude oil in 2050 as it is now. U.S. crude production is expected to average 13.1 million barrels a day from 2024 to 2050. Tight oil will average 9.3 million barrels a day. This is written by the Harvard types, the ones that their daddy put them through school. I have considerable respect for the EIA's work. You know what's coming. But its shale projections have consistently puzzled me. It seems that the EIA includes probable and possible. Those are the three measurements of reserved are the proved, which can be, you can have subcategories like producing or behind pipe or whatever. But you have proved, you have probable and possible. And where that comes in particular is that banks lend at certain ratios on that. And I don't know what it is now. It changes depending on the market. But I would assume they lend 50% on proven, maybe 20 or 30%, or probably around 20%. It depends on how bullish the world is on probable and possible. That doesn't even move the needle. Maybe 5%. It probably doesn't get lent on at all. So what he's saying here is he thinks the analysts include probable and possible reserves as well as technically recoverable resources in the volumes of reserves in the tight sands. And remember, the tight sands are presumed to be blanket sands, and you're just going to be producing it like a factory for the rest of time. This is what you get when you send people to schools and they focus on other things than their brain power. The EIA does this without any consideration for its own oil price projections and implications for producible oil. This unfortunately encourages the popular belief that shale plays will last forever. They won't. And this is what I'm telling you could be a shock to the financial system. Oh, we can have 400, what is it? Yeah, 400 quadrillion? Is that possible? I think that's right. Of global debt or derivatives, because the economy will grow. Well, you need cheap energy to grow the economy. Unfortunately, the EIA's numbers encourage the popular belief that shale plays will last forever. Donald Trump thinks that. The problem is that these plays are just like all other plays, except that shale oil plays cost a lot more to drill and complete. That's in dollar terms. When you start measuring the cost of drilling these wells in terms of fracking material, water disposal, but most importantly, of how much energy it takes to run those trucks, run those drills. I wish I had pictures to show you. These fracking trucks and rigs, you'll have 30 of them, 40 of them all around one well. And you wonder, I do anyway, there's a lot of diesel spent to bring those trucks in and then turn the engines on to drill, how much are they finding? All right. The problem is that shale plays are just like all other plays, except they cost more. They are fields. All fields decline. Permanent tight oil reserves are estimated at about 15 billion barrels. So Permian tight oil reserves are estimated at about 15 billion barrels. That's similar to the reserves for the Prudhoe Bay, which is currently North America's largest field. Production peaked at the Prudhoe Bay in 1987 at 1.7 million barrels a day, and it's now producing 208 billion barrels. Sorry, skip the billion. It's so the Prudhoe Bay produced 1.7 million barrels of oil a day in 1987. Today it produces 200 barrels of oil a day. What parallel universe do shale plays get to be in when the EIA ignores the laws of Earth physics followed by Prudhoe Bay in order to produce near current levels until the middle of the century? The signals are flashing yellow, if not red, about the future of tight oil production. My analysis is not an outlier. Pioneer's CEO Scott Sheffield said that Permian output will peak in 5 to 6 years. In November, Continental Resources Chair Harold Hamm suggested that core areas of the Bakken play were reaching their peak and that deeper, tough rock objectives would be needed to sustain production. Gorg and Rosenquag wrote in May that the Permian Basin was depleting faster or more quickly than generally believed, and that output might peak in 2023. So Goring and Rosenquag wrote that Permian output might peak in 2023. This is the beginning of the end for the Permian and other tight oil plays. There are decades of remaining production, but at lower rates. The data is clear. Wells are producing less than in previous years. It doesn't take a degree in petroleum geology or engineering to understand what this means. The production peak may come in 2024 or several years later. The details do not interest me. A long-term decline in shale play oil production, which might account for almost 70% of U.S. supply, requires our attention. It may be a good thing for the environment and climate change, but it will also accelerate the trauma of a society which is unprepared to live with less. And that's exactly right. That's the thing that's scary. We're not ready for that. Hey, happy Ramadan, Abdul Razik. I hope you're having a peaceful and holy Ramadan. I think it started 10 days ago, so you don't have much longer, I don't think, 20 more days. but I hope all is well. Steve, finger might be ready to go. I was thinking of shaving some paper silver funds, maybe increase my finger. I have 30,000 shares, down 22%, up 34% on silver funds. I wouldn't make that trade. I wouldn't swap out of that. But it's your call. I think you have to sit down with a pad of paper and you have to write at the top, what would Benjamin Franklin do? And you put down a column of pros and a column of cons. You could put down what would Jesus do, but I'm not sure he cares about trading in the stock market. Or you could just skip the question and just write pros and cons, or just start with a pad of paper and write down your thoughts. But here are my thoughts on doing that. You already have enough finger. 30,000 shares is great. So let's talk about finger. Finger is $1.40. There are rumors, and that's all it can be called. There are rumors that some fund is buying a lot of stock. Now, I think the source we all have confidence in, but it's a rumor. So I would put that down on a list on a pad of paper. I might put a question mark next to that bit of information. I would write down that the fourth quarter numbers should be coming out mid-April. Maybe the annual report comes out then, but as somebody corrected me and he was 100% right, they can take another 45 days to get the annual report out. But anyway, we should start having some information on the C2 contract, the vehicles with data contract. I think that's very exciting, but do you have 100% confidence that that information will come out, that it will be clear to understand? Yeah, maybe. I mean, I think it's a reasonable bet. But I might put a dash next to that instead of a question mark, just sort of for And then the fourth quarter may turn positive in earnings, but it doesn't matter. It'll be slightly positive versus slightly negative per share. So I would give that a reasonably high level of confidence, but I would write next to it, may not have a huge impact. It could have good impact. I'm not saying it won't, but it just might not change things that much right away. Then you write down that there could be a research report coming out. It hasn't come yet. So I'm talking about you're making a financial decision. I'm not talking about cheerleading here. I'm not talking trying to be popular. I would put a question mark next to that because you also don't know what a research report would say. All right, so what else? You could put down the rumors that somebody's buying a lot of stock. That I think that's possible, but whether it's one investor or a handful of investors, a fund, something like that, I don't know that until something gets published that we really know. But the stock is trading as if somebody's buying, and I'm not sure it's we. But anyway, So you might put a check mark next to that. I think somebody is buying the stock. Are they willing to run it up? I don't know, but you could probably say that's a pretty good thing. And then there's a rumor of a company buying into the stock. Again, I can't contradict the source, but it doesn't make any sense to me. It doesn't make any sense. Unless it's directed by the government, that could be true. I don't know. So for me, I'd put a question mark next to that one. And then technically, momentum, all the people aware the stock as it breaks through certain levels, and maybe Roth Capital finally does its job. I don't think it's doing a good job supporting the aftermarket at all. I think it went away. But anyway, for technical trading reasons, the stock might go to 2.25. I would give that a check mark because that looks like what's happening. So those are all the positives, and I'm trying to rate them. I mean, you could use a percentage number if you wanted, but out of all of that, I think there's good results, let's say, ahead of Finger. And I think the stock is relatively cheap to where it's been. Now, on the negative side, I guess I would only have 2 entries. Every time the stock goes up, the criminals start selling the stock off. And the other negative that would concern me about Finger is in order to meet the good news of ever increasing orders under this exclusive contract for the C2, the surveillance vehicles and the response vehicles, they're going to need more money. Now, do they get the money because they enter a partnership with a company? Maybe. That would be great. Do they get the money because one or more of their investors decide to lend the money? Maybe. That would be great. But you have to admit there's a possibility they'll do another deal with Roth Capital. My own judgment on Roth Capital is they're just a flow through for their real clients are the shorts. Now I'm probably not at 50-50. I might be at a third percent that there's a lot of good aspects to Roth Capital as well. So as the company does better, Roth Capital will probably perform better. All right, so what does that mean for Finger in my eyes? I think Finger can go from $1.40 to maybe 2.25, pull back a bit, go to 3. It'll be more complicated than this. Go to 3, pull back a bit, and maybe go to 4. Maybe go to 5. That's nice. And if you bought it down here, you would say, wow, I doubled my money. So if it goes from 140, let's call it 150 to 3, you double your money. If it goes to 4 or 5, you triple your money. That's pretty good. Pretty damn good. What are the odds? I mean, as a trade, I think pretty strong. But as a fundamental story, are there any risks there? I don't know. You have to judge those. You have to judge those risks. Silver, on the other hand, And I'm not going to be able to give you percentages um, because I haven't studied any of them right now. But silver is the Achilles heel of the financial system. And there's only one asset class. John will point out that platinum too, and he's right. But there's only one asset class on the planet which has not reached all-time highs. Nominal all-time highs, much less inflation adjusted. There's one, silver. Silver went to 49, I think, in the Hunt brothers squeeze. And then the government came in and changed the margin requirements, changed the another ratio, I forget what it was called, but they changed the margin requirements to hold a position. And I suppose they changed the percentage you needed to put up to establish a new position. And I think they even for a period of time, they just made it liquidate only. But they certainly, to my memory, it's not that I remember it from the newspapers. I read about it years later. They allowed for futures contracts to be settled in cash instead of silver. Anyway, all the things they did to change destroyed the price of silver, and the Hunt brothers had margin calls, and they just got completely haircut. I think it was unfair, and I don't think they were greedy. I think they were playing something like we do sometimes, but the system came up and fought back. So it got to basically $50. But there was a lot of silver above ground. There were supplies of silver. Today, silver got to $51, I think, an ounce in, I think, 2011, last decade. And nothing happened like that, but they fought. Everybody fought on the other side of the table, and they got the price down. And silver went as low as, I think, $12 or $15 an ounce as recently as, I want to say 2015, 2016. And now it's I don't know, $32 an ounce. I didn't look recently. So what do you have in silver? Let's say you pay $40 an ounce for silver. Now there's no above ground supply anywhere, at least at these prices. You have EV vehicles in China. Maybe it's going out of favor here, but you have EV vehicles. You have Tesla, you have batteries, you have solar power, you have cell phones, smartphones, watches which talk to you, Fitbits. You have really advanced automobiles, really advanced stereo systems. You have electronics that never existed back in the 80s. Speakers, things you can buy, things you can put on your ear. We have more population, although maybe not in China. So the health effects of silver come into play. The demand for silver as an antiseptic comes into play. Silver is in weaponry and military devices. That's increased, but let's not focus on that. Silver is in, I'm sure, in AI and in the data centers. Silver is in jewelry. Silver is the poor man's gold, and as gold prices get essentially out of reach for much of the Indian population and maybe the Chinese, there's increased demand for silver. Russia, amongst others, central bank has started to build silver into its reserve position. And I'm sure I've left things out as uses for silver. It's used in photography, although I think that may be less important. It's used in mirrors. It's used in lighting. Anyway, silver has huge industrial and other uses other than as a speculative currency play, if you want to call it a currency. It's not. It's real money. Currency is just credit. The dollar bill in your wallet is just credit. Look at it. Pull it out. It says the full faith and credit of I think the United States government. It might say of the Federal Reserve. I have some dollars over there. I don't remember what it's something like that. It's just credit. Paper currency is just credit. Your shares of Finger Motion or any other certificate you own are just pieces of paper, as we've learned. But silver and gold, and in fairness to John, platinum, palladium, these are real money. These are real. They can't be printed. And in the case of silver, most of the silver that's been used industrially, it's been thrown out. It's either gone or it's in the town dump. Gold has all been saved, and there's a lot of gold above ground, and gold's prices are going up. I think it's being hoarded and bought by central banks. But at some point, if the price gets high enough, the cowboys can play with paper gold and suppress it. I think gold's breaking out right now. I think gold is on the verge, Steve, of a move to $4,000 or $5,000 an ounce. I remember my thesis is I think there's going to be an everything rally, probably by September. It might go into next year, but after it happens, I think there's. I've chosen a big number, and it's partly to make my point. But I think the Dow could go back to 1,000. It could go back to 2,500. I think the Dow could fall 95% in a crash. Will it stay down? No, I think the Fed is going to pull out all of the stops, and they'll probably be the central bank of the world. believe it or not. I know you guys, not you, but everybody's Bitcoin that, XRP, which I love, not picking on it, but we've never seen how Bitcoin behaves in a crash of the market. Crash. I'm not talking about correction. I'm talking about crash. The likelihood is the world will be scrambling for dollars. I know. How can it be? And the Fed will be printing dollars and buying everything. They will buy everything. Houses, mortgages, debt. Probably they may even step in and buy blue chip stocks. I think when the crash comes, the Fed will expand its balance sheet. And again, I go to a dramatic number. I would imagine they'll go to 50 trillion, 60 trillion, 100 trillion. To me, it doesn't matter. I think they will go as far as the world will allow them to go. And human beings are going to want to believe in something when the crisis, and I think the dollar has one more shot of mass delusion. And that should be enough. That should be enough to get the market kick-started and the economy doing something. And I don't know. Pick a time frame. And, it'd be so funny if it all matched. Not funny. That's funny how. Funny how. No, it wouldn't be funny. It would be, as they say in certain parts of the country, ironical. It would be ironic to see the markets move almost in lockstep to what happened 100 years ago. But 100 years ago, the markets crashed, and the Fed didn't do what I'm talking about, to my memory. But the markets rallied, So I think there'll be a rally in the markets, and they won't go to the highs. You'll never see whatever high happens. If it does, that's the last high you'll see. Or at least it's the last high I'll probably see in my lifetime. Maybe not, unless I don't know how much more time I have. I'd love to live a long, long time. So I don't want to jinx it. But anyway, on the side of silver on my pad of paper, I would put down that it's a highly shorted, rigged market. I'd put a check mark next to that. I would say I don't have to rely on a CEO or a board, and I don't have to defend the company against a Roth Capital or Yorkville Advisors. I'd put a check mark next to that. There is no excess silver, physical silver supply like there is in gold at these prices. And there's a huge paper problem. And all it takes is Elon Musk selling futures or buying futures in the silver market, maybe in London, so that he can lock down a huge supply of silver for his brand new Tesla phone that he's going to launch, which might not have the greatest chance against the flip Apple phone. Who knows? But I'm interested in the Tesla phone. And then when he goes to exercise those futures to stand for delivery, there's no silver. oh my gosh, you could have a panic in silver that you'd never seen. I'd put a check mark again next to that. And I would ask myself, can silver supply suddenly increase? And I'll tell you quickly, there's no mines in the world that they can just turn on. So the answer is no. I'd put a check to that. So I'm bored now. I'm bored with my yellow pad, and I draw a line on the bottom, and I just say to myself, what do I miss out if I own finger instead of silver, or the other way around? What do I miss out? Well, they both are short squeeze plays, maybe. Finger seems to be under control in that area, but it could be. But silver is a fantastic short squeeze play. Fantastic. So what do I miss out? I sell my silver and I buy finger. Finger could go from 140, let's call it 150, to 3. That's a double. That's pretty darn good. And when that could probably happen in the next 2 to 3 months. And it could go to 5. Let's call it 450. So it could triple. Now, yes, it could squeeze. Yes, it could. But they could also need to raise money and issue shares. And I don't know how to put that risk in there, Steve. If you're the CEO of Finger and the stock gets to 5 and Roth Capital is calling you and they tell you they can give you $25 million at 450 or 4.25, I don't know. Is it tempting? Or is the CEO going to say, no, I want a short squeeze? I don't know. I'm not as optimistic that the short squeeze, if it ever comes in Finger, is going to happen immediately, but it could. So you got to make that judgment on your own. My opinion on Finger, you could get a short squeeze, but I'm also going to try to be negative on that story. If the markets rally 30, 40, 50% from here and gold goes to, let's say, 4,500, I think silver can go to $100, 120. But when the market crashes, silver's volatile. I think silver will pull back. One guy I follow thinks it can come all the way back down to 30 or even $26 an ounce in a crash. I don't think so, but that's what a market's made of. I think silver might come back to 50 or 45, not lower, because I think there'll be a lot of demand for it. So I don't think the squeeze in silver necessarily is going to happen this year. It could. But, all right, let me break it down. Silver is $34 right now. I think you can triple your money in silver. I think there's a 50-50 chance it squeezes, but probably not. But if you keep your silver now, you'll be able to trade it then, and you'll feel strong and good. And I think there'll be an opportunity to buy Finger. In other words, if you hold your silver now and silver goes up and Finger goes up, will you have missed an opportunity to be in Finger? I don't think so. I think you can make, if they both go up, I bet you make that same ratio of a swap. If silver goes, if silver breaks $50, $51, which I think it's about to, it could happen now, next week, next month. But when it does, I there isn't a Lind Partners or a Kramer Roth Capital, Geneva Roth Capital, which could stop it. It just won't. So I think silver, I really think silver is the where you should be. I wouldn't sell it, but I don't know. That's a long answer. If you're right and you sell your silver, you buy finger triples, maybe you can get back into silver at $40. That's a great trade. It's a great trade. So there's no right answer, Steve. There's no right answer. I wouldn't do it. I wouldn't do it. I don't own, I'm thinking, do I own any silver anymore? I used to own a lot of it. I bought silver instead of Bitcoin. And over the years, I've had to sell the silver, and it's a tragedy. Had I purchased Bitcoin, I'd be Tommy down in Dominican Republic, and you guys would be calling me. Kangers, I haven't been in a while. Do you still think Nix is going to 12? I don't know I don't know your time frame on what you're saying. I'll tell you what the color I've heard. I don't have any specific information, but what I understand is that the people involved with the company strongly believe it'll be a $20 stock in the summer. Maybe it's the fall, something like that. The press release last put out, and it's on Twitter, are indicating that they're going to be revenue positive. They're bringing in an acquisition that my understanding is revenue positive. I don't have anything firm. But the press release also says they intend to bring in more acquisitions. I think the outlook of the core group is they do not want to dilute the shares. They are seeking revenue positive, revenue generating acquisitions. I think the guy doing it has tremendous deal flow. I think he's really good at it. I think he is able to attract excellent companies. I wish he were doing it for Logic, but I think he sold Logic to this Israeli company, and I guess now we just have to let the Israeli company bring in other companies. It's very disappointing, but I think he's really good. But don't give up on Logic. I'm not trying to be negative. I've heard and I've been promised an update, and I've heard it's not as bad as my instincts. But that deal flow that was going to go to Logic, all those companies, maybe they now come to Nixie. I don't know, but I certainly think there exist many revenue positive companies which are going to be exposed to the Nixie opportunity. So I think it's believable that Nixie will build its revenues over the next months, year, whatever. They did announce a share buyback. It's on Twitter. And I think that can help. It's a little bit gimmicky, frankly, but it also, if there's cash, if there's revenue, if there's cash flow, they can, instead of being a gimmick, it can become a reality. A lot of companies talk about buying back shares and they never do it. If Nixie actually is able to do it, it could be exciting. So if your question is, can it go to 12 by the end of the year? Yeah, I think it can. There is a large short position left over from the recruiter.com days. So there still is the potential for a short squeeze, but I really believe that the pros, they're all crooks. The people out there that take advantage of regulatory indifference, exchange indifference, broker dealer indifference, Congress indifference. I think might have the short position under control. So I'd give it 50-50. I would, when was it? October, November? I was pretty sure there could be something. I'd give it more 50-50 now because the more time goes by, it's not a surprise anymore. And I mean, I don't know what goes on exactly, but I just figure they get it more under control. I expect that, and I've been reading some posts. Let me see if there's one here I can read so I can here's one guy says, company needs to come forward in regards to the buyback unless it's a bluff. And then, I don't want to, I don't know if I should. Anyway, you can find it on X. The guy that knows a lot comes back and says, I assure you it's not a bluff. Nix has revenues, or will have it, buyback and acquisitions. Nix canceled its S1. It should show cash flow positive revenue, and it might start a buyback. And so therefore you could see a squeeze. Nix has only 3 million shares in the float. And this group knows 4 million shares that are held by them. And, so things could happen. Frankie, who comes on here, said the official short interest rate has been increased to 2,400,000. Well, actually 2,447,000. This is really huge. So yeah, I think Nixie is ready for some news based on its press releases. I think the only thing is there going to be this huge volume, 50 million, 100 million, 200 million shares? I don't know. It looks like there was that kind of volume before. Will it come again? I think so, one more time. But I think that's where the story becomes highly, highly unpredictable. But yes, I do think it can go to 12. If Nixie, let's say tomorrow, I'll just use it as an example. Let's say tomorrow they announce something that seems good. That means the shorts will start selling it. So by the time you read it, the stock will be down. So you'll think, oh, this must be bad news. Let's say it's enough to bring in buying and maybe some computerized buying because it's good news. And I don't know the dynamic there. I think Nixie could go to $4, $5, $6. And so then the question is, do you hang in there for 12 as you're targeting? Do you sell part there and then wait for the, it's all up to you. It's all up to you. But for me, I think as soon as Nix has some volume, it's trading up strongly. I think it would be an attractive sell candidate, even if it continues, like you say, with much higher numbers, because using that same strategy I belabored, should I own, what would Ben do? Finger versus silver. I think Railtown is ready for news too, and I think Nixie can triple from here, but I think it's risky. It's got a lot of moving parts. I think Nixie could go up as you're suggesting. It could go to 12. It could go to 20 in some sort of short-term action. I certainly think what I'm hearing about management, Nixie has a strategy to get it maybe to $20 by September or something. But I think Railtown, I got to be consistent. I think Railtown offers a sharp potential rally. I don't think it doesn't feel like Railtown's going to announce anything this week. Why? Because they haven't done it yet. Why do I say that? Well, because if it's good news, and I don't expect it to be bad news based on the last press release, if I were the company, I wouldn't announce good news on Thursday or Friday. I'd wait till Monday. But I think that's how close it is on Railtown. So, if Nixie were to run tomorrow or Friday or Monday or Tuesday, I might sell it to buy more Railtown, or maybe buy a little finger, buy a little more G-Bucks. I don't know. But I think I would put it in Railtown. There's no answer. There's no positive. There's no one answer. But I do think the entry point for Nixie is attractive. I do think Nixie can have a run, and it could start at any time, or it could take weeks. I just don't know. I don't know if you're in Nixie for a trade. A lot of people traded out in December. I consider my Nixie position a trade right now, but I can see a thesis where Nixie becomes more of an investment position. As I'm talking and blabbing, I think you've got Finger, Nixie, maybe G-Bucks, Silver. You probably have one or two names. I'm probably forgetting them. They all have this 2 to 3 to 4x potential, which is huge, by the way. It's huge. So when one goes, maybe you get out of some of it anyway and move to the others that haven't moved yet. Yeah, I'm sorry it's such a long-winded one. My head is sort of pounding, so that means I'm not doing that well. When we think Finger gonna run, I don't know when you think it. I have no idea. I have no idea when you think it's gonna run. I have no idea what you mean by run. I think Finger. Let's see where it's trading. Finger in the closing price 139, after hours 140. I'll just try to find a chart. I mean, I'm not great at these charts. Well, I think this area could be very much resistance. You've had it come up to 139, 140, 141, maybe even 143 or so, and they attack it. They bring it back down. There is a positive crossing of the the 50-day moving average. My eyesight's bad. It might be the 20-day moving average crossed the 50 in a positive way. And it actually looks like the 50 is about to do it too. Do the favor back. So I think finger looks technically like it wants to go up. If it breaks through sort of the 140, 145 range, I think it might pause at 160. I don't think so. I really think, I mean, you could see it pause at 180, I guess. But I really think $192 is where it'll go if it breaks out. Now, if it does that, do you count that as a run? I do. I count that as a run. I can't, it's gone blank. So I can't give you any more. So I would call that a run. I can't see anymore, so I have to do it by memory. If finger went to 2, let me just see if I can bring it back. There it is. It might take a little effort to get out of there, but if it broke that with volume, 240 is probably where it would stop and pull back to test. So you make $1 on your trade right now. That's a pretty good run. So yeah, I think that could happen very soon. And that's why I like finger. If it breaks through sort of 260, 280, I don't know. It's going to be tough. I don't think it's just going to soar after that. I think it's going to have a lot of backing and filling because there's a lot of supply up there. It seems like. So anyway, I think finger motion could have it's on an inflection point. They're probably going to try to sell it down, but I think if it breaks through sort of 140, 145 with some volume, it could head to $2 range, pull back a little maybe, but then get to 240. That's a good move, and I would consider that a run. And I think that could happen pretty soon. If you have non-tradable shares from a dividend payment over a year and it becomes tradable and you sell, is it long-term or short-term? It's well, I don't think I have all the information. If you have a promise that you're going to get dividends and you haven't received them yet, that gets a little more complicated. In other words, if there's an ex-dividend date and I don't know, maybe I'm making it too complicated, but if the transfer agent somehow doesn't get the dividends to you or your brokerage firm, and you were supposed to have them on July 1st, and you get them on September 1st, that's a little bit of a gray area. I would assume that you can record it as July 1st because that's when you were entitled to get them, but you didn't get them until September 1st. So I would just check with somebody, not me, on that question. But if you have non-tradable shares in your account and they start to trade, for tax purposes, the date that counts out the long-term versus short-term is the date you received the certificates. And a good place to start is the date on the certificate if you have it at home. If you don't have that, you can check with the transfer agent. If you don't have that, you can just use the date that it showed up in your account at your brokerage firm. My opinion, it's not worth being exact. In other words, if it showed up in your brokerage firm on, Monday, July 7th, but it was issued on July 1st, I think you could have an argument that it belonged to you on July 1st, but I just don't think it's worth the audit. I don't think it's worth the argument. I don't think it's worth the back and forth. So I would just use the date that it came into my account. It will sit there as non-tradable, but you own it. And just because you couldn't trade it, it is still part of your ownership period. And so for tax purposes, short-term versus long-term is determined by how long you owned the asset. So I hope I know that was long-winded, but that's the answer. Non-tradable shares from a dividend payment for over a year, it's long-term. AOC's net worth is 200,000. A little fact checking doesn't hurt. Oh, where'd you check your fact? I'm ready to be corrected, but do you check it on CNN? I showed you my source. It was a goofball source. So let's see. What is Alexandra Ocasio-Cortez net worth? This is what passes for fact checking now. I don't go down to the library. I don't go to a newspaper's website. I just Google it. And I'm sure the results are not manipulated. Fact check under Alexandria Ocasio-Cortez for Congress. Fact check. Alexandria Ocasio-Cortez does not have a net worth of 20 million. Ocasio-Cortez's most recent financial disclosure filed in 2021, so that's 3 years ago, shows she had between 3,000 and 45,000 in assets. That's 3 years ago. So I'm not convinced. Not convinced. But you got to take her at her word. I don't think she's lying. Yahoo, another great source. No, Alexandria Ocasio-Cortez is not worth 29 million. The claim is false. Ocasio-Cortez's financial disclosures show that the congresswoman's net worth is lower than 29 million. Business Insider, AOC says she's worth less than 500,000. X, Open Secrets DC. Facebook posts claim Representative Alexandria Ocasio-Cortez has a net worth of 29 million, but AOC's most recent financial disclosure in 2021, so it's probably for 2020, that's a long time ago. Newsweek, what is Alexandria Ocasio-Cortez's net worth? Democrat fights claim. Ocasio-Cortez has denied claims that her net worth is 30 million amid a social media firestorm. I'm doing a lot of fact checking. It's a lot of hard work. Alexandria Ocasio-Cortez says she's worth less than 500,000. Quiver Quantitative. All right, let me click Quiver Quantitative. Let's see what they say. Alexandria Ocasio-Cortez, red lipstick. Net worth estimate, $25,000. Bank account 17, mutual funds 8. This is from Quiver Quantitative. They've gone through her, somehow they have her assets at Charles Schwab and National Hispanic Bank and Allied Bank. I don't know how they get it. All right, so Quiver Quantitative, I don't see the date, but they have her under 50,000. Reuters, fact check. Financial disclosures do not show Ocasio-Cortez. One post reads, 2 years ago, she was broke when elected. Forbes, no, AOC isn't rich yet. USAA today. Representative Alexandria Ocasio-Cortez's net worth does not top $1 million. Factcheck.org. Posts make baseless claim about net worth of Ocasio-Cortez. Well, so far, my fact-checking is finding a lot of posts that all go back to what AOC's office says she's worth in 2021. Pants on fire. Reuters, no evidence Alexandria Ocasio-Cortez has a net worth of 29 million. AOC, I am one of the lowest net worth members of Congress. I trade no stock and I take no outside income. My filings are public. I loathe corruption. All right, I'll take her at her word. There, I found something that she posted. It's not her office. I'll take her at her word. And I will believe that that picture that I showed you really is wrong. But I couldn't erase that. I don't know who put it up. I do think you agreed Nancy Pelosi has a high net worth. I guess we have to question if Elizabeth Warren is worth 70 million. I guess we have to question if Ilhan Omar is worth 83 million. I guess we have to question if Mitch McConnell's worth 95 million. That's too bad. You're right. I guess it calls into question all of those. And it probably the Democrats have been the most honest operatives ever. Ever. The official short interest has been increased by 2,363,028 shares as of February 28th, 2025. The total short position counts currently 2,447,770 shares on NIX. That is really huge. Dividend from HNRC supposedly will be tradable this month. Yeah, I got that in my account too. So it's long term. It is long term. I already answered that. AOC's net worth is 200,000. Actually, she said it's lower than that. So I but I get your point. I get your point. How much will the government save when they sell off the FINRA offices? Nothing. Do you think Gary Gensler has fled the country by now? FINRA is a private company. It's a public company. I don't think they own the offices. I think there's a lease. They're in the old NASDAQ building. Well, no, they just moved. Last year they moved. But I think it's a lease, so they don't own the building. I don't think. Has Gary Gensler fled the country? Hell no. Hell no. He's going to get a job at Goldman or at Gibson Dunn or I don't know, Morgan Stanley or at BlackRock. Gary Gensler is worth something like 125 million, maybe more. And I think by the time he finishes the next decade, he'll be worth 300, 400 million. He's got a great future ahead of him. Benjamin, it's going to be nice to hear some good news after the market on Finger. I don't know. I'm not crossing my finger for news on Finger coming anytime. And almost always, have you noticed almost always when news comes out, stocks go down? I don't know this obsession with news. I follow news to see if my sources are telling me the truth or that their analysis is good or that rumors, I guess, would be better, are accurate, or that the company's telling the truth. In the case of a lot of these that we talk about, the companies put out the information already. It's nice to see performance based on what they say they're going to do. That's why I get interested. But when the news comes out, you got to see what happens. If the news is good and it matches your story and your theory, your thesis, and the stock's down, I mean, a guy like you has extra money, a guy like me doesn't, but I would buy more. That's what I would do. If the news comes out and it's not so good and the stock's down, I don't know, that gets more complicated. Do I get out while it's down or do what? And if the news comes out and it's kind of a push, but everyone else thinks it's good, and for some reason the stock is up, and I look at it and I say, hey, that doesn't really say what they said, maybe that's a chance to get out. But in general, news is an excuse for the computers to start selling stock. They do it ruthlessly. They do it automatically. If the computers pick certain keywords out in the news release that imply that the company might have to raise money, might have to sell shares, or that a deal is almost always the deal is announced before it's finalized. Why? Because full disclosure rules require it. But that's what the criminals love. Well, if one CEO agreed to sell her company to another CEO at $25 a share, the announcement is going to say they've come to a memorandum of understanding or something like that. Well, the shorts, they can sell that stock down from $25 down to $5. And the first CEO is going to say, hell no, I'm not doing this trade. You told me you were going to give us 10 million shares at $25. Now you're going to give us 10 million shares at $5? Hell no. And the shorts, it's all self-fulfilling. They short it down, bust the trade, and cover. Or the company needs money, and they cover that way. And do I need to tell you who's not doing her job? It's inexcusable that it goes on. I get bored explaining it, but I feel like I got to keep explaining it because it doesn't sink in. No, I don't expect any news in the aftermarket for Finger today. Any news Finger comes up with that we're expecting, it's not going to move the stock. Buyers move the stock. If it turns positive in earnings, I think that could bring in buyers and that'll move the stock. But no, I'm not expecting good news after market. I'm not expecting bad news. What's the price? I think he said I think I'm confusing it with G-Bucks. I better be careful, Jasper. I was going to say $1.92, but I think that was G-Bucks. Is Finger more in the $4 range? I can't remember. We'll have to ask him next time. Hey, Frank, Barbara. Well, hello there. I guess it's been a long, long time. How am I doing? Well, I guess I'm doing fine. been so long, but it seems like just yesterday. Ain't it funny how time slips away? Ah, yes, they sold it last night. They got a great price for it. Listed it for $6.99. Sold it for $780. 10 offers. Can we get an update on Raleigh? Yeah, I can try. I mean, it's not. I'm glad they sold their house for so much, but I don't know what the heck you're talking about. But anyway, that sounds good. You got 780 instead of 699. Are you out of your mind? Let's see where Rail closed. Well, hello there. All right, so finger closed at 139. The Rail looks like it might have closed at 28. Yeah, Rail closed at 28.05. Low volume. I like that. I like that it's low volume. Let me see if there's any news. Who wants yesterday's papers? Who wants yesterday's girls? Nobody in the world. I show finger at 140. Wow. You guys, David, I'm going to make one observation if I can find it. I think Railtown has a higher market cap than AOC's net worth. Let's see. RLAIF on Yahoo. They have a different close. They have 27.47. And they have a market cap of 38 million for Railtown. Now, on the caution side, Railtown's been as low as seller boxed and as high as 62 cents this year. I'm guessing it was a shell that they picked up, but I don't know. I'll try to find out. Anyway, let me just look here because I saw it on my screen. But I'd rather use Yahoo than E-Trade. Yeah, GTII closed at 18 cents. So GTII has a market cap of $61 million. $61 million market cap. I guess you could say, well, they're going to claw back all those shares. So it's really only a $19 million market cap. You could say that. But Railtown is pretty cheap compared to that. Let me just look up Railtown's news history, because one of my premises is after 4 weeks, they're going to almost certainly make an announcement. Right, so Railtown AI Technologies announces an MOU to acquire AI Partnerships Corp 29 days ago. So I think you're getting pretty close that that MOU is going to be finalized. Because in Canada, it takes 4 weeks of notice. So they're buying this network of over 160 AI SaaS companies, vertical market solutions, dynamic organization, drives substantial revenue growth, and will be able to scale enterprise solutions worldwide. The combination of Railtown AI and AI partners will provide both organizations with an opportunity to leverage Railtown AI's conductor product. One of the fundamental objectives in the establishment of AIP's affiliate network was to allow AIP, that company, to identify and acquire the best affiliates as part of a broader strategic roll-up strategy. This transaction is expected to provide the resulting entity the benefit of a public company structure with access to capital markets as it executes the affiliate acquisition strategy. So in other words, they're going to implement their broader strategic roll-up strategy. And they'll deploy Railtown's AI's proprietary technologies. Anyway, they have expanded partnerships with relationships already in place with MILA, AMII. I don't really know much about them. Microsoft, NVIDIA, AMD, and UBC. Recurring enterprise revenue. This acquisition represents a transformative moment both for Railtown AI and AI Partnerships Corp. By combining our conductor platform with AIP's extensive affiliate network and enterprise partnerships, we are creating a powerhouse that will drive significant revenue growth and deliver innovative AI solutions to businesses worldwide. The opportunities ahead are immense. We are poised to expand our reach, scale enterprise sales, and accelerate innovation across industries. Together, we will shape the future of AI in ways that unlock long-term value for our shareholders, customers, and partners, said Corey Brandolini, CEO of Railtown AI Technologies, 29 days ago. From its inception, AIP Partners set out to assemble the largest network of AI solutions organizations who provide a diverse package of AI solutions who meet the needs of enterprises and industry sectors that realize significant ROI from the adoption of AI-based application solutions. It's a big mouthful. We found Railtown's conductor product had broad deployment relevance across the entirety of our network. With the combination of Railtown and AIP, we are excited to actualize, which isn't actually a word, but we are excited to actualize our public market vision as we seek to commence with an aggressive targeted affiliate acquisition mandate upon the conclusion of this exciting transaction, stated Dr. Tom Core call in love. Dr. Tom Core, CEO of AI Partnerships Corp. How long does shareholder approval notice last in Canada? See, I'm doing fact checking, but I'm not sure I wrote the right question. How long does shareholder approval notice last in Canada? That is what I'm asking. A corporation must hold shareholder meeting no longer than 15 months after. Well, that's not what I want. The prescribed period for directors to provide notice of the time and place of a meeting is not less than 21 days and not more than 60. It's not the right question. Advance notice requirements in Canada, that's not my question. I can't find the answer in my extensive, oh here, Advance Norton Rose Fulbright.com, Advance Notice by Law, Canada. Advance Notice by Law 2.0 extends the deadline for giving notice of a director nomination from the current 30 days. That's not what I want. All right, so I can't find proof, David, but it's my understanding that in Canada, it's 4 weeks, it's 30 days. So that announcement came out 29 days ago. If I had to guess, Railtown won't make any kind of announcement tomorrow. That's 30 days. I can't confirm because I don't know what question to ask. I can't confirm if it's 30 days, but that's what I heard. I don't think they do it tomorrow, but Friday maybe. But then if it's good news, why do it Friday, right? So I expect Railtown will soon have follow-up news to that news announcement, which will be that they completed the formal agreement to make that acquisition. Then, if you listen to me, the combined company will, according to the other CEO, Dr. Core, I just read it, will aggressively go after the mandate to acquire the best companies in there and roll them up. According to Brandolini and the press release in general, they're targeting companies with revenue. So I expect you're going to see, as early as next week, a pretty exciting announcement from Railtown that will say that they finished this deal as it's, I mean, you could have read this yourself. They're going to finish this deal. They I don't know if they would announce they've already acquired some companies in there. I don't know. But they'll certainly announce they're moving forward on that mandate as they already published. And then we'll see what the computers do. But I think words like definitive, words like revenue, if it's in the press release, could cause buying rather than selling. And I expect Railtown to go up. If I'm right, it could be next week. I'm not promising that, but it could be as soon as next week. Where could Railtown go? I think you could see it at look, if it breaks through 40 cents, it'll get to 60 cents. But I think it'll go to $1.20 on good news. And if it breaks through there, I don't know, it could go much higher. But I think you're going to see the stock up 2 or 3 times. I think the best way to describe it is that you're not going to have an opportunity to buy Railtown under 40 cents for very much longer. Let's wait till the news comes out before we predict where the stock goes from there. But I think I'm very excited for it. I think now's the time to be in it. It's a very similar feeling I have about silver. I don't think you're going to be able to buy silver under $40 for very much longer. I don't think, I don't know, these other stocks that might be squeeze plays, that's a little less predictable, but let's see. I don't know if that's a good enough update on Railtown, but it's getting close. It's 29 days ago for that news. You heard the strength of the release. 30 days is tomorrow. I would guess they have no reason to delay good news. I mean, I wouldn't do it on a Friday. It'll get buried. But maybe Monday, Tuesday, Wednesday next week. Will I be right? Let's find out. I'll make a side bet with you. $1. All right, let me go down to the bottom. What does the finger high volume mean with finger? Well, according to Ham, and I've talked to other investors who I don't know if we just talked about it. But according to Ham, somebody's in there buying 1.5 million shares and they want to own 5 million shares. That's according to Ham. Let me see what the volume was today. I'm not picking on him. I'm just saying, I'm trying to give you the source of my information. As this other gentleman says, a little research would be a good idea. 470,000 shares. I don't know what it means, Drew. I think that a lot of that's short selling. That's what I think. And maybe crossing and spoofing. But I think somebody is buying finger. I think, as I said, I think the chart's looking better. So what could be going on? is that people close to this story know KBO. People in the know KBO. People know that it's just all the same litany of things. The audit must be finished. So that means all sorts of good things. By definition, the audit's either finished or close to being done. The fourth quarter numbers are in, which means the full year numbers are at least pretty close to being in. We know that the fourth quarter, the earnings could turn positive. I don't think that means anything for last year's numbers. I don't think it's going to be dramatically positive. But if in the management's discussion, they can say, we are now positive in our earnings, and this is why, and this is what we project in the future, all of a sudden, finger motion is a different story in terms of, wow, we have a contract here that's going to give us positive earnings from here to kingdom come. It's a different story. So the stock drifts upward. Last year was tax loss selling. That's gone. It takes 30 days for the January effect to come in. We've been in February. A lot of the selling's washed out. To the extent the criminals are still in there, they may be stepping back because they got it under control. I don't know. But it feels like people are buying the stock. Could it be that there's a big company looking to do something with finger motion? The only thing I can think makes sense is if a SAIC, that's the car manufacturer, the SUV manufacturer, the truck manufacturer, I don't know, you can Google it, SAIC, big website, Chinese. Finger motion got a contract last year. It says in the press release, you can look it up, that it's exclusive for Chinese governments, local, state, and federal, to request from finger motion vehicles which can be first responders, they can survey, they can go out in the world and provide data to the governments. These vehicles can be cars, SUVs, Jeeps, I guess, and drones, other things. So finger motion has a mandate to assemble, purchase these vehicles, install their equipment, which I assume they buy elsewhere, and put in their data systems, whatever it is. They assemble all that. They deliver those vehicles. It takes 90 days after delivery to get paid if the government isn't slow walking payment. So they got an order for 2 of these vehicles last year, November, I think, October, 2. My understanding is the margin, according to him, I guess this guy wants me to do a little fact checking. The source of that understanding is mostly from him, but the margin is pretty good. So if we assume the margin might be 30%, I don't know. If finger motion spent, I have no idea, and this is the numbers we're looking for in the fourth quarter. But conceptually, if finger motion somehow spent $500,000 total on those 2 cars, they'll get $800,000 back let's say they delivered them in December, they'll get, I'm making up the numbers, they'll get 800,000 back in April or May. Well, it's great to have that contract, but that's not all that exciting. So in December, Finger Motion did a financing. It was a little bit painful, but I think it was well calculated, and I think it was the reasonable thing to do at that time. I think it's pretty clear to me anyway. The holidays were coming up, that they had to hit it. Some deals are expensive, some deals they raised this money at $1.50. Who knows? This coming December, maybe they raise a bunch of money at $30. I'm making it up, but my point is it can go both ways. But right now it was a little bit expensive. On the other hand, they got the money. So let's say they took the $5 million, again, I'm making it up, and they built out, instead of 2 vehicles, they started and are completing 20 vehicles. And let's say it takes till the end of the first quarter to finish that, because they're still optimizing the procedures and order times and staff and all that. But let's say that they deliver those vehicles April 1st, now let's say April 2nd, to the government, whichever government ordered them. Let's use the same ratio. Let's say they paid $5 million, they'll get $8 million back in 90 days, maybe 120 days, if the government can pay and if they're not slow walking it. So if they deliver all the vehicles in April 2nd, they'll get the money maybe in August. That's great. $8 million. I'm making it up. But they get their pay for these vehicles in August, $8 million. Great. Awesome. But this is March. And everyone's back to business in China. And what if other governments called up Finger Motion and said, we too have a requirement for these vehicles. Premier Xi wants us to buy 50 of them, and we're giving you that order. You have the exclusive contract, and we need an answer from you by... It's such a nightmare creating a hypothetical, but we need an answer from you by May 1st, World Labor Day, whether or not you want to go forward. Well, here's Finger Motion. They did 2 cars under the contract in November and delivered them maybe January 1. They had a contract, I'm making it up, for 20 cars in December, and everyone's on holiday. They got back to work on it, and maybe they're going to deliver it April 2nd or April 15th. But now all of a sudden they have another order. Where are they going to get that money from? Can they factor the sale of the cars or the vehicles that they will be paid in August? Maybe. I don't know how factoring works in China. But they haven't been delivered yet, so it's not likely. So what's the solution? What is a solution? I can see one glaring solution. SAIC says, you know what? We want to do those 50 vehicles. We understand that you have to wait, let's say 4 or 5 months to get paid out from the Chinese government or the state of Shunshin or the city of Homen, but we trust the government will pay you. So SAIC could say, you know what? We're not going to charge you. Let's get started and we'll order the vehicles. We're not going to charge you until later. Or they could say, we'll use our credit to do it. And the same sort of thing. Like, let's just bridge the gap. Or they might say, let's go into a JV, let's do something. And maybe this is where the rumors coming in. And maybe, and I'm making it up, maybe they join forces a little bit. Because if you think it through, Drew, eventually, if it's all true and if it all works, and this is an area which finger motion has no expertise, as far as I know, but SAIC does, so it makes it perfect, maybe, that they work together. But let's say they do 50 cars every 90 days. And it never grows from there. Well, they just need to bridge the gap to get the first payout received on the 50 cars, basically 120 days from delivery. So they need really to bridge 2 quarters for maybe $5 million a quarter. And once it's up and running, it becomes a perpetual motion machine. So it's possible that there's some activity in finger motion stock because maybe something's happening along those lines. I don't know. But that's what I would guess would cause some interest in the stock, is the ramping up of the government orders, in which we already know is going on, in the C2 space, as they call it. Maybe the buyers are coming in because of that. There's been a loosening in China of the restrictions on private contracts. Maybe it's because of that. Maybe somebody's buying because of a wind of some contract somewhere. But I don't know. It could just be, some of the buying could be our own. But if I had to guess, Drew, there is probably some buying by the people who own the stock, maybe some people who want to own the stock, and it's based on price. It's based that it looks cheap, and it's based on things like this starting to come to fruition. But Drew, I think the trade is $1.50 to $2 to $3 to $4, maybe $5 first, and then we'll read the tea leaves then. Finger is over, and you know it, William. This is history unimagined. I've never heard of history unimagined. All history is imagined. All history is imagined. So finger is over and you know it. Well, I think the time that you're taking the time to type that, pretty good indication it's not. I I've been quite cautious for a year and a half or so on finger, and I've done my research and done as best I can. And where I come down right now is this is a company, Finger Motion is a company with roughly trailing, I don't know, I'm doing it by memory, but roughly 35 million annualized revenue for the last couple of years. They've had to go through the Chinese lockdown and economic shutdown. It's a company that's literally transitioned from being using your finger to do things on a screen, whether it's for playing games, I don't know, but they've developed their relationships in China. I've met, I don't know, history unimagined. I didn't imagine my meetings, but I went to a meeting in New York when Finger Motion was put on NASDAQ, which is an imagined exchange. And it's an imagined accomplishment because the CEO of NASDAQ imagines that she has a hard job and does the hard work and that she's a leader. But I met all the investors except for I think her name is Lily. She was back in China working on a contract. That's what I was told. But I think I met let's see, 1, 2, 3, 4, 5, 6, 7 times 5, 6. Let's say 5 because I might be imagining too many tables. But I think I met as many as 35 people close to Finger. If I'm wrong, I'm not trying to exaggerate. I'm just trying to picture the room. 1, 2, 3, 4, 5, 6, maybe 6 times 6, 6 times 5. Anyway, something like 30, 36 people, 40 people. Martin Shen was one of them, but the rest were mostly investors, and maybe there was one other. One was the Univest banker, and all the he had a table that was, I'd say, there was some very beautiful women that sat with him. Maybe the number of investors was 25. Those 25 investors have put up a lot of money in Finger. And there was no indication that Finger Motion is over. In fact, the enthusiasm for Finger Motion was extreme. Now, they all have the illusion that it means something good to be on NASDAQ. They don't realize that you guys just slaughter companies. You pick the meat off the bones while you pay off Adina Friedman. But whatever. The enthusiasm for Finger was sky high. Now, I did hear quite a few conversations that I didn't even write down. And frankly, I don't really remember all the details. But I was told a lot of things in confidence that are exciting. So I don't think Finger is over by any means. I do think you guys have crushed it. I think you took a stock that had about, I don't know, something like a short position of 4 million, 6 million shares and a float of maybe 10 million shares, maybe a little more, but not much more. All closely held, by the way. You took that stock from, let's use the higher number, a short position of 6 million shares, and you paid off some guys. And I congratulate you on that. You had a good strategy, and somehow you're able to collude and you get your payoffs, your envelopes, your ideas. I don't know how you do it without the regulators catching you, but I guess you have a way. So about 2 years ago, 2 Novembers ago, Finger Motion was $8 or $9, huge volume. It was, I think you guys were in trouble. What I remember is because of the warrant as a special dividend, that Fidelity was borrowing shares at 1,000%. And then you guys came in, you paid off some gentlemen who work with you, and you popped the bubble. The other firm was Wells Fargo had stopped taking buy orders. But at the time, the stock was 7, 8, 9, and people were exercising their warrants at 2 3/4. They might have been selling the shares, but it was causing you all a lot of pain. So you busted it by bribing some guys, paying off some guys, and coming on here, and then you financed a shitty company that you also shorted. I mean, you make money every way but loose. But what I noticed you did when that happened, and I can't speak for the patterns that Ham sees. I think he's right. But what I saw in Finger Motion in 10 days, 10 trading days, I saw you and your cohorts sell on FINRA's website. Now, there's a guy out of the Amex to say, oh, you can't believe those numbers because it doesn't count the delivery from offshore. It doesn't count the buying back, So with that caveat, I think he's wrong, but it is computer trading. And I do believe FINRA might only report part of the information because I think FINRA is corrupt. But I also think in a short period of time, with securities laws that you have to locate shares before you sell them, and you have to get them in within the settlement date, it is not legal to have shares coming in 6 months or in weeks, but that's what you've corrupted. I saw 110 million shares total naked short in 10 days. So what I saw you do at that time was racketeering, collusion, breaking securities laws, and selling stock you didn't own to the tune of over 100 million shares. And yeah, you tried to make it over. You tried to destroy finger motion, like you destroyed MMAT, MULN. You tried to destroy Root. You destroyed Torchlight Energy. You destroyed hundreds, thousands of companies. As patriots, I know you live in the United States. Your loyalty is to America. And hey, your children have to go to school. And so you come on here to make fun of me. But it's you who are over, not me. Maybe you'll get away with this another 2 decades of your life. But I'll tell you, when you're sitting in your home, you're not going to be proud of what you did. You're not going to be proud at all. That hole in your heart, that hole in your gut, that conscience that bothers you, nags at you, that's why you're active all the time. That's why your family life is hectic. That's why you come on here. That's why you take the payoffs. That's why you get involved as many of these transactions as you can. That's why you get the kickbacks. That's why you hang out with each other, so you can feel proud. That's why you come on here to gloat. You want to fill that emptiness with this illusion of success, money you've stolen by cheating. And it's not hard. You thought as you went through school and you learned how to argue, and you were getting reasonable grades, that you would get into a profession that was difficult. But this is boring. It's actually boring to you. But hey, you click the computer, take your payoff, trade a bit, and then you come on to gloat. You come on to gloat, which says a lot about you. It also says, like I've said, about how empty your life is. The end result we cannot know. Your actions, your team, your cohorts collectively are really powerful. You have lawyers on your side. I don't know how you met them. You have your initial seed capital, probably from a hedge fund. I don't know how you met them. You work together in packs, as all cowards do. You come up with idiotic names. And then you bash. And you try to get people to think there's something wrong with me. Well, I'll let you in on a secret. There's lots of things wrong with me. I have a temper. I get impatient. Sometimes I totally overreact. Sometimes I'm slow on the uptick. Sometimes I go, wait a minute, I didn't think of that. Sometimes I call out patterns, and in this woke world, it makes me look like I'm some, throwback to imagined history. But I think it's pathetic. Why do I do this? I really don't know. Years ago, and I've told the story, he's a great guy. The president of my fraternity. What a great sense of humor, older than I am, but I was so proud that he even considered me a friend. He went into the Navy. He's a lawyer, um, uh, very successful. But he called me one time 30 years ago to do Christmas in April. So we up here somewhere, a bunch of mostly do-gooder suburbanites, mostly white, showed up to help a family that was African American that lived at the time. Now that neighborhood is totally $1 million, $2 million homes, but at the time, a very rundown. It's back when Washington didn't have grocery stores everywhere and didn't have. It was a long time ago. Everything's changed, particularly. I don't notice, and I might be blind to it, but I don't notice any racial tensions or the tension I experience here is more blockhead Democrat liberals upset about, so I got to button my lip on political views, which I do, but otherwise we've got a pretty good city going. But back then we showed up, a bunch of people showed up, and we had a bunch of tasks to do on this homebound woman's house. And Colin and I were assigned the task of painting her bathroom. I remember she had one of those really large things you sit on when you have a walker. But anyway, we got to work right away. We got a cup of coffee, went upstairs, started working right away, and it's a lot of work. Most of the do-gooders stayed outside talking, chatting, checking each other out, having a donut, getting coffee, running to the hardware store to get tools, coming back and oh my gosh, it's time for lunch. Went for lunch, came back, and they did a little bit of work, and Colin and I stayed and stayed and stayed, and we worked and we worked and we worked. And it came, I don't know, around 6:30, and all of a sudden, this woman's turns out to be a mother and a grandmother, and her house was flooded with people that were living there. Her daughter, I don't know about son, but her 25, 26-year-old grandson, at least, and then others. And this one guy came in to see how we're doing, and Colin looked at me and I looked at him, and he said, we're not going to finish this until midnight. And I got a wife, and I got to get home, but it's not much left. Why don't we ask him to do it? He could do it for his grandmother or his mother. With everything's here, we paid for it. It's just this little bit left to do. I said, well, that's not a bad idea. And he was my ride, because at the time I was living out in Virginia. And I said, all right. So Colin goes out, and he says, and the guy, I could hear him. And the guy standing sort of, I don't know if it was the kitchen or the hallway. And I could hear Colin ask him, he says, and he's being just nice. He says, look, we've been working, my friend and I have been working since 6:37. We haven't taken any breaks. And, there's probably about an hour and a half left, but we're not going to be able to finish it I think the cutoff was like 7:00, and we're not going to be able to finish it in time. And the guy goes, He didn't even let Colin finish. The guy goes, "That's all right. That's okay. Take your time. Take your time." And Colin had this infectious laugh. He just burst out laughing. He came back in and he said, he just couldn't stop laughing. He said, "I tried to get him to take over and do the work, but he totally misunderstood me. And what should we do?" So I went out and asked the guy, I said, "Look, we're gonna go. We're gonna clean up. We're gonna leave it nicely, but you can finish it. It probably only take you about half an hour, 45 minutes to finish it. But Colin has a family, a little children to get back to, and so we're gonna go." And I walked through the house as we're leaving, and I noticed all these projects, like in the kitchen, there was a hole that wasn't there before. There was some carpentry that was started on a door, but wasn't finished. There was I don't know if it was carpeting or sanding on a stairwell that wasn't finished. And I thought, my gosh, this is Christmas in April? All these do-gooders come here and they make it worse, and then they leave and they're patting themselves on the back. "I'm a good Christian. I helped this little old lady." She wasn't little. She was pretty big, pretty big. She had a deep voice. I went to her. I said, "Hey, we're leaving. We tried to do our best. We're going to have," I forget the guy's name, "he'll finish it for you." And I looked around. I said, I don't know what to say. Back then I hadn't started any real estate. I didn't have any contacts. I said, "I don't know how to get this finished up. I'll try to do my best." But I wasn't a member of the church. So on the way home in the car, I asked Colin, how do you finish this? There's a bunch of projects there undone. And like I say, he was president 2 years, I think. Everybody loved him. He's a leader. I think that he followed up. It wasn't my group. It wasn't my church. I just volunteered one day. But I think he did follow up and make sure that woman's projects were finished. And so history unimagined, I hope you made $10 by me saying your name. I think the reason I'm doing this is because I started it and I want to finish it. I started it with some assumptions that I think in retrospect, you guys have made sure are no longer true. And I've tried to adjust for that. But early on, like the guy from Amex, I remembered the systems in place on Wall Street. But incrementally, argumentatively, settlement at a time, you've taken over the ground of compliance, of the Merrill Lynch rule, of reg show, of exemptions, of lobbyists, of lawyers confusing, pressing ever one more settlement, build the houses, go get another, bulldoze it, tear it down, build another, claim it. And you've expanded your turf quite dramatically over the last 30 years. It's not you personally, but it's all of you collectively. And you've pushed the boundaries. You've started enormous rivers of cash. flowing, and therefore you have the lawyers on your side. Over time, I don't think it was you, but over time, the press in the United States has been consolidated to about 5 or 6 outlets, and the control is essentially one hedge fund, one big pool of money. I think it's BlackRock if you look it up. And that guy controls DEI, ESG, U.S. policies. That gentleman runs trillions of dollars. And make no mistake about it, he's pushed these boundaries so that even journalism, even American awareness of what you all do to investors, no one knows. And you're able to come on and ridicule. You have, according to, there's no name on there, but the reporting on the Anson funds, you have a criminal practice which removes trillions of dollars from the United States without paying taxes. And you're probably just a small part of it. But collectively, you started with what I remember, and you're too young to remember, but your criminal organization started enterprise, your criminal enterprise started with a little bit of a loose area. And it used to be offshore. It was called the Safe Harbor, and I think it was Reg, damn it, H, F, G. Anyway, it's somewhere around in there. So people offshore could participate in IPOs, new issues and secondaries. And they actually could do what you do. They could sell stock they didn't have, particularly if it was a secondary, and they could sell it, and that cash, they could use it to buy the deal. So they were able to almost risk-free buy shares cheaper than what they sold them for with money they sold. They didn't own the shares. And then they would call their retail or institutional broker. They got the shares on the offering. They'd, I think it was DVP, we called it back then, and they'd send it out. That little narrow area was something that I guess was just too hard to police, and those people became really good customers of Wall Street. Why? Because they take every deal. And therefore, investment bankers had at least part of the deal placed. Now, it wasn't without risk to the banker, because some of these guys would decay the trade and walk away from it. And guess what? Once those guys became such an important volume, you might find one Wall Street firm that kicked them out, but they could just go elsewhere. There were so many brokers. They could have more than one broker at Morgan Stanley. They could have 100 brokers at Morgan Stanley to do that with. So that was one area that I was, somewhat aware of, and nobody seemed to really get upset about it, but it didn't seem like a big bit. But you started there, and you expanded it. The other area was settlement. back then settlement took 5 days. And so somebody could sell shares and, or the other way, buy, but they had 5 days to get it done. So it was total of 7, 5 business days, total 7 days. And that happened all the time. And in fact, I had clients who sold shares, and I would get the first 7 days, hey, no problem. And then you'd get an automatic extension, and you didn't get any penalty for that. And just to cut to the chase, that could be expanded to 21 days, but that was the maximum. That became problematic. Now I fought, and there were ways, but you had to make a lot of phone calls. You had to pull in a lot of favors, and you had to get the regional and national. And anyway, it could be done, but it wasn't a matter of course. But what I learned back then that you guys did is you could go, and the company you could go to that I heard about was you could go to Bear Stearns. So you could move those trades, and it was on both sides of the trade, long or short. You could move unsettled trades by going to Bear Stearns. I don't know how it happened. I don't know if they used your same accounts and it was just crossing trades, but they were able to start the clock again for another 21 days. And it just moved around. So there was that going on way back then. But what existed that stopped you in your wholesale slaughter of companies is there were investment banks, there were research reports, that retail could buy the stocks, there were compliance officers, there were people that bought in short positions, and there was enforcement. If you violated the rules once or twice, you couldn't trade again. And you know, I don't know what it was like pre-internet, but I don't think trading from offshore like you all do was allowed. I mean, now you can work with your criminal friends. You can get one share traded on the Chicago Options Exchange. I don't know how you do it, but your lawyers got all that. Remember, you're just going and claiming one bit of land at a time, and then you build some houses. So that's a settlement. You go do it again, and it gets ever bigger. And if there's a distraction, you just do it again and again, and it gets bigger and bigger and bigger. And then people just accept it as a fait accompli. And the regular tours are 12 years old, and they've never heard of the way it was. And so you've encroached and encroached and encroached. And you guys have knocked out a highly profitable criminal enterprise. It's amazing. It's absolutely amazing. I've gone over all these specific how-tos that go on, so I'm not going to do it right now. But you incrementally knocked out every single problem using attorneys, bribing, going to Congress, expanding regulations all the way up to Reg Show. You used message boards. Now you use X, as it's called. And you play psychology games. You love to argue. You never get hurt feelings that you show. It's just a I personally think it's a sickness, but it's a machinery that you have to operate every single waking hour to take as much as you can. It's okay. It's just faceless, nameless people you can come on here and ridicule. And as some of you put it, hey, we just had some fun at the expense of retail. You can gloat, you can cheer, you can make unsubstantiated statements, but you keep doing it because it's profitable. It really is profitable for everybody. You have the lawyers, the hedge fund is at arm's distance, but they're going to make sure you never go to jail. But you can come out to a person whose name is out here. You can accuse me of all sorts of things. I mean, you'd be accurate with stupidity. You'd be accurate with mistakes. You would be accurate that early on in this, I thought that Wall Street still cared about that. It called they know what you do is illegal, but they're in on it. It's just a big flood of money. So I don't know how long it's been, 3 years ago. I actually thought that there's buy-ins, that there's enforcement of the rules, but you fixed all that. You got rid of those problems. So I actually thought there were short squeezes because I'd experienced it, I'd seen it. But you fixed all of those problems. Ever incrementally. Hey, there's somebody living there in that house, just take it, bulldoze it. Now we'll build a condo building, do it again. And that's an analogy, but that's what you've done with Wall Street. That's what you've done with the brokerage firms. That's what you've done with Congress, the lobbyists, the lawyers, the whole regulatory structure. And then you go offshore. I think what you've built really is truly incredible. It's gigantic. I wouldn't say it's imaginative. It's just the ever acquisitive, ever increasing, ever taking, ever cheating, ever lying. But it gets big, big, big. Wow. And then bribing and buying, because you don't fight. You don't get it. You pay other people to do it. And they pay you to do this. But the funniest thing, something in your background you have to somehow rationalize it that you're telling the truth, that you're being good. So you, and some of you, maybe it's not you specifically, often come out and say what you're about to do, and then you do it, and it's all illegal. But something in your head crosses that off that you've been honest. You can't stay away from your victims, partly because this is where the juice is. Stocks that are flat, you can't make money on. But stocks that I come here and I talk about, and remember, I've had an evolving understanding of how big this problem is and how implacable the foe is, and just how much you've corrupted. You're like a cancer. You've destroyed the U.S. markets. And there's nothing that you do that is talented other than acquiring, stealing, taking. nothing. It's nothing good you do. But you come here when there's meat on the bone because you got to rip it off. You need the stocks to go up so you can short them down. And you need some success. So you send guys here to pump stories, and everyone floods into them. I don't know if you're doing it with GTII right now. I have no idea. I think there's good people involved with GTII, but it's an example. You've got that stock up at I can't see it right now, but it's $60 million market cap. Wouldn't you love to start taking a piece of that and shorting it on down from people who are naive? They're not bad. They're not stupid. They're just naive enough to believe that the SEC is there to make sure that the stock market is fair. They're there to make sure the rules, that the SEC is there to make sure the rules are enforced. They're there to make sure that people like you can't operate. They're naive. Every person on Wall Street is either ignorant of this or they're working with you. Wall Street has evolved to asset gatherers. And they just put money with managers, and they end up with the people who ultimately are paying your way and protecting you. And everybody thinks Wall Street's going to rescue them. Somebody's going to come in and get the banksters to do the right thing. They don't realize just how magnificent this criminal enterprise is that you've built up. It's amazing. It's actually amazing. So all you need to do is come here, and you don't know anything about Finger. You don't know anything about any of these. All you have to do is come and spread fear, uncertainty, and doubt. And so you short some in a LLC that you can walk away from. You got buddies out there. You know that Finger Motion just did, and you're probably part of it with Roth Capital, but Finger Motion just issued 1.5 warrants for every share they sold. So you have your attorneys, or your associates somewhere have the attorneys. And I don't know, and all of you guys, it's just somehow happened. You just somehow met and trusted each other. But you know, and you have an attorney fill out the paperwork with the prime broker, and there's many prime brokers. You have, for some reason, convinced Congress and Wall Street that market makers have a place. You know they don't do anything. You might even be one of them. Market makers don't do anything. They just help you. So that 1.5 warrant coverage, oh, it's at the market, and we didn't do a toxic convertible note. No, it doesn't matter. That warrant coverage lets you take naked, non-located risk. When Finger Motion gets up to $1.40, you're able to I don't know. Let's say you sold 10,000 shares over the last 2 days at $1.38. You don't own the shares. You have the relationships. Your back is covered. You sell 10,000 shares at $1.38. If you can come here and spread fear, uncertainty, and doubt with inane comments like, finger is over and you know it, William, which is a statement as if you know what the F you're talking about. It's a statement as if you've done research. It's a statement as if you even know how to read a balance sheet. It's also an accusation that I'm somehow committing a crime, when in fact, you were short 10,000 shares that you don't own and you have no money, but you're being backed by your group of friends who just happen to know. And you sold stock you don't own at $1.38. Now, if you can get everybody here to sell stock, and then your buddies elsewhere can also sell, you get it down to $1.28 tomorrow. Just one, it only has to be there briefly. You print it at $1.28. You walk away with $1,000 for doing nothing. You don't dig ditches. You don't wipe you don't take the diapers off of an elderly woman and clean her so she can sleep at night. You don't make food. You don't build an automobile. You don't study. You don't write the next novel. You don't create a new technology. All you do is accumulate lucre. You have made money, manna, your God. Manna being money. You can't worship God and manna both. But that's what you do. So why do I do this? I really don't know. I mean, at nights, I can't even sleep. At nights, I feel like a complete idiot. Is this what I've done with my life? Who's watching? A lot of people I don't know. Who's going to notice that I'm trying to do something good? Nobody. Nobody. Am I making money? Every now and then I get a stock idea that is valuable sometimes, but as often as not, I lose on those. I've made some friendships that matter to me. But what is this? What's this for me? What it is, I think, is I see what you're doing. I don't fully understand all of it, but I see what you're doing. And I know how it used to be. Now, I'm naive, and maybe this went on since money was exchanged at the temple that we all know the story about. I don't know. But the biggest reason I think I keep doing it. When I walk away and I say, I'm not going to effing get on there again, I can't believe that. And I can't believe I reacted that way, and I can't stand it. And I'm so depressed that I don't even want to get out of bed the next day. And I say, today I'm not going on. I'm going to go to a museum. I'm just going to pick up a book. I just got to do something else. I've lost things. I've lost friends. I've lost my father, lost my dog. I feel like there's a huge margin call that's ever going on in my life. And why do I keep doing it? So assholes like you can say, FUD, finger is over, and you know it, William? You have no basis for that. You might be right. It'll be because you can destroy a stock and you can destroy a company like you did to MMAT because you own the cops, you own the media, you own the government, you own the treasury, you own the banks, you own the big boys, you own the lawyers. You own it all. And you've changed the landscape. So you can come ridicule and it works. But I think I do it because I signed up to protect people or to inform people about your FUD. I wanted your FUD to not work. Now I look back on it, and the mistakes I made was believing that there could be short squeezes that could go up, up, up. Because I believed, like it was back when I was on Wall Street, they came down hard. They listened to my bullshit, which I didn't lie, but I hedge things sometimes. Hey, where's that money? You said you'd have it in here today at 10:30. Ralph, it's coming. It's coming. I talked to George and he said it's okay, but it's coming. It'll be, and that kind of thing. But if I bought one more day, then oh my gosh, the next day. They didn't even bother calling. It was sold out or bought in, and I'm sitting there with an error that I have to pay out of net, not gross, 12 grand, 50 grand. One error I had, the manager of the firm took me to lunch, and he gave this guy I'm not going to say the guy's name. His initials were EB. He gave the guy the office's operations manager to call. While I'm at at lunch, at the request of my manager, EB calls in with a trade. And the operations manager takes it, does it. And I have a $55,000 error. And the manager of the office said, well, get a day timer and write down that. And he told me, and he closed the door. He said, write this, 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 and down. I said, Mike, that's a lie. That's not true. That's not what happened. Well, write it down anyway, because if this ever goes further, this is Wall Street. I said, Mike, I can't do that. That's a lie. But I can't believe that you're charging me the $55,000. I didn't even write the ticket. I didn't even write the ticket. Anyway, that was out of net, not gross. It was a nightmare. But that's the Wall Street that I remember. It's not that way anymore, apparently. You guys can trade in another world where there is no consequence. You can come on here and say something like this, which is, by the way, misleading. It's false. And I think in and of itself, it's a securities law violation. But you can come do it. You know you're going to, there's no name there. Somebody like Stevie Cohen backs you up. I'm not saying it's he, but they show you how to do it. They got lawyers covering you. They got somebody to call. You're okay. You're protected. But I think I keep coming on because I promised to get this job done. That's why I think so that's why I don't quit. Somebody just said that you're gone. So you may be gone, but I want to finish with one thing. I think you still have a hole in your heart. And you have a guilt and a conscience you cannot assuage. And that's what I think. I guess I'm saying that somewhere in there, you still have some good. And I hope you start listening to it. I hope you start listening to it. All right. Jenny just told me you're gone, so thank you, Jenny. I'll move on. Jenny, you're the best. You're the best, Jenny. And I think it was yesterday. It might have been this morning. I heard birds singing. I thought of you. Ham is also always wrong. I guess you're gone, so I'm not going to respond to that. But you're always right because your predictions are self-fulfilling. So anyway, hey John, you're from Mexico. God, you travel all a lot. Remember when you were pumping GTII? No, I never pumped it. I do think I got excited about what it could do in a squeeze, and I described that, but I never pumped it. I mean, if you could argue that because Ham was on with me that I'm associated with that, sure, you could. But anyway, I don't accept your view of it. It's reality. William is always wrong. I love that. So was your mama. The best part of you ran down I better not say that. Sorry if it hurts. 80 block went through. Wow, 80K. Frankie, I really think finger motion is showing strength, but somebody did ask, and you might ask why. I'm not sure why, but the way it's trading, the chart just seems, it seems, that it's catching, that it's grabbing some purchase. Could you tell us about what sports you played in your heyday and any interesting anecdotes there with associated? Let me think about that. I'm not, you can't confuse me with the high school quarterback, I'll tell you that. But I did things. I cross country skied. I ran track. I played. I had one basket in basketball. Coach Strong would put me in, and we won the game, but he couldn't believe I scored, and that made him more happy than winning the game. He was beside himself. I drove for the basket, and I leapt. I jumped, and I did a layup through the middle, so I guess it's not really a layup. I overwhelmed those guys. And my name was in the town paper the next day for 2 points. Will finger squeeze before GTII starts trading? No, I don't think so. I don't think so. I think GTII could start trading within 90 days. And I don't think finger will squeeze within 90 days. That's my view. It's different than hams, I guess. I do give that caution. I mean, I think ham really is good at seeing the patterns and tracking finger, but I've gotten somewhat neutral. And neutral's the wrong word. I said they had GME and AMC under control. I think I'd be inconsistent if I didn't notice that whoever they are, might have finger under control. But I haven't given up. Don't get me wrong. But it's just, in a list of likely events, I don't think a squeeze in finger is going to happen before GTII starts trading, as you say it. GTII does trade but it's by appointment, and it's fake, and I think it's fraudulent. Not by anybody involved with us. I'm talking by the market makers and the brokerage firms that created this expert market. I think that's it's very dangerous for people to trade in that situation. But no, I don't think it will. Everything comes on. Sounds like History U was looking for a merger of finger and. All right. This guy. It's a pretty good indication that maybe one of our stocks is giving these guys enough juice to short, or maybe there's some trouble. Maybe there's some trouble in, who knows? It could be Nixie, it could be finger. That's pretty good. Jenny took care of it, I think. Looks like Lynn Partners wanting, well, yeah, I agree with that. Is there a physical silver demand versus above ground stockpile ratio available? I will promise to try to create either defined it and read it to you, or to create a presentation for that, Giuseppe. It's not published data, but there are analysts that follow it. But I'll give you the simple answer. The silver market is at the point that the physical demand from electronics, medical, solar, etc., physical demand for silver is, I think, beyond the point. And you're going to say, well, how could that be? And I don't quite know the answer, but I think when you sell the entire year's production of silver in paper markets in one trade or one day, you can manipulate the price. Remember, our commodities are priced on the margin, which is insanity when it comes to oil, for example. We are giving away our natural bounty at $60 a barrel. Why? Because it's mispriced. It's mispriced. That's the problem with our financial system. But that's a topic for another day. The price of silver is based on the last price printed. The value of all the silver out there is based on the last price printed at these exchanges. And they sell paper silver. It's just like this other guy. I'm telling you, it's the greatest crime ever, and nobody understands it. China understands it. I think Putin understands it too, because they did it to the ruble and they did it to Russia in 1999. I think he understands it. And I think as soon as they're ready, I worry about China. A friend warned me about it. And I said, yeah, I think the bond market, this, that. But I worry about China ignoring some of the things I've said, like the population might be missing. I worry about it because we, and I'm talking about our banks, have seemed to have power everywhere. We stopped Gaddafi, and we probably stole his gold. We killed him for sure. We stopped, Saddam, and I'm sure we got his gold. But we certainly, those two men, we stopped their idea of pricing oil, essentially pricing oil and gold. Very simplistic summary. We stopped that guy from Chavez, Hugo Chavez. And guess what? Shortly after, his gold got repatriated to Venezuela. Where is it? It's back with the New York banks. I worry about China. I wonder what we have in store, and it might be this economic collapse. China is rumored to have 25,000 tons of gold in their reserves, and then another 10 to 15 held by their population. It's massive amounts of gold. Massive. But what if what's coming is designed to get China to disgorge that gold to save our banksters? I don't know. I'm not smart enough to figure all the angles, but I wouldn't be surprised. We're going to be two scorpions. I'm not picking China, but it's going to be like two scorpions to the battle. Our banks are not going to go down without a fight. War will come first. But anyway, back to your question on silver. We are already at the point Giuseppe, where the demand for physical silver is greater than the availability of physical silver. That's my opinion. Obviously, the markets somehow are muddling through. My contention to you is there'll come a stand for delivery 1 month. I think it'll come out of London. That's my opinion, because I think in Chicago or New York, they'll just change the rules and convert it to cash instead of silver. But I think this problem is going to show up in London. And maybe that's how they're hiding it. Maybe they're doing it with gold or derivatives, but maybe they're making some exceptions in the US markets and covering over in London. I don't know. But I do know that the gold and the silver physical is moving to Asia, and they are trading on honest exchanges, small compared to ours. There is going to come, Giuseppe, in my opinion, 1 month, 1 week, 1 day. I think it's going to be on the LBMA, where somebody stands for delivery for silver, and there isn't any. Any's the wrong word. There isn't enough. And it's going to change your life. I don't care if you own silver or not. It's going to change your life. These people that are excited about Bitcoin and XRP and Fannie Mae and Pfizer and GameStop, oh my gosh. You are going to see overnight experts in silver. You're going to see everybody talking about silver. Why? It's going to be in all the news stories everywhere. And all of a sudden, everybody's going to talk to you about silver. But I think what would happen when that failure occurs, and it could be Tesla, it could be Apple, it could be, not that those companies will be in trouble, don't get me wrong. They could be the ones who are asking for delivery and get shortchanged. It could be I don't know who. It could be a wealthy accumulator. But when it happens, I think silver opens. I'm not even sure it trades for days, but when they allow it to trade again, it won't be $35. And Giuseppe, I'll try to make a more lucid if this, then that. But I used to think JP Morgan was the bank that would go down. It's really odd now. I don't know how to describe this, and I wish somebody intelligent would explain it to me. But I think JP Morgan is still the largest naked short position, if that's what we can call it, in silver, the biggest manipulator, the biggest exposure. But what's odd is I've read that Jamie Dimon has also gone long silver for JP Morgan. So it makes me confused. So the bank that I think, because Lehman's gone, Bear Stearns is gone, and there might be London banks. Nothing pops in my head. I'll try to learn. But the bank I think might be most exposed, believe it or not, is Bank of America. I think that's the one they'll take down. But we'll find out. We'll find out. They'll take a bank down. They'll take a bank down. Silver. And look, this may not happen. I'm telling you, I think it's on the verge right now, but it may not happen for 5 or 6 years. Silver is volatile. If we have a huge rallies in the markets and then a crash, look, Giuseppe, I don't know where to find verifiable data, but I am, as that guy called it, fact checking best I can. It is entirely reasonable to think that China's population is overstated by half. That's incredible for demand for commodities. But I don't know how to prove it. There's very rational people talking about it and putting the study together. But it's not on the New York Times. But then again, neither is Fukushima Daiichi on the front of New York Times. Neither was the existence of possibly as many as 16 million votes that didn't exist. 16 million, when our last excellent adventure occurred. I don't want to state it. So I don't know where to find the news that you can believe, but my point is demand for physical silver doesn't have to stay at this. Demand for physical silver could come down over the next months too. But there is no quick supply of silver coming on the market. There are some mines that can increase a little bit, but there's no quick supply if it goes the wrong way. And in commodities, they have this expression. It's stupid, like all stupid expressions, you remember it. The cure for high prices, the cure for low prices is high prices, or whatever, something like that. Point is, if silver prices go up, more supply will come out. It'll come out of your attic. It'll come out of, dealers, so, but it's the short run. It's the shock to the system. And I think silver needs to be priced much higher to reach an equilibrium in supply and demand. Anyway, let me try to put something together that's clearer than what I just said. Ham has just answered on X. What was the question? Oh. The real shorts have an average number about $1.40. So thanks to them selling the stock, I say 350. All right, so the real shorts are at 140, which is pretty low. But Ham's naked short is 350. That makes sense to me. If you want to be safe, call it $4. But there's Jenny. Hey, William, hope all is well. Don't comment on that person. Waste your time. Hey, I'm sorry I'm wasting everybody else's time. I hope you're well, Jenny. Let's talk about something else. All right, let's talk about moose and moose. I saw this today. I was walking back from, I went down to the bank. I had to scurry, but I was two dogs walking with this guy, and he was lost in his mind. But the one dog, for some reason, came over to me. It was so great. Big fluffy dog came over to me sniffing and stood next to me, wanted attention. So I pet her or him, And it was great. I loved it. And I think the guy obviously had to stop. I think he's wondering, what the hell am I doing? But then the other dog saw it, and the other dog came in, and he bulldozes his way in between the first dog and me because he wanted attention. It was the nicest thing that happened in a long time. I thought it was great. I still don't understand why you insist in reading all these negative waves. What's this with the negative wave? Makes no sense. The gold to silver ratio, John. Where is that summary? Here it is. John, I printed it out. I thought I did a pretty good job with it. I don't know if it's still here. I'm afraid to. Yeah, that's a guess, Giuseppe. Don't go shorting it. Don't go, But I put it up. I thought I was very clever, but I think I highlighted it here. It's only one paragraph, so I still haven't found the book that you thought that I read, but this guy refers to it, the gold silver ratio, and it's just about 2 paragraphs, and I put it in a chart. I'll find it. Okay. So he writes 1, 2, 3 paragraphs, and he calls it "When is Silver Golden?" And this is Mike Maloney. He says, "I rely on the gold-silver ratio to tell me what to do." So he follows this strictly. He says, "I dutifully obey." What is the gold-silver ratio? What is the gold to silver ratio? It's simply how many ounces of silver it takes to buy 1 ounce of gold. It's easy to calculate. Just take the price of an ounce of gold and divide it by the price of silver. Let's just do that quickly. I'll go to goldprice.com. Okay, no, it's goldprice.org. All right, so silver is 33. This is a spot. You're not going to pay this. It's 33.24. That's really up, darn it. Yet again, it pulled back and now it's back up. That's life. Gold is 29.34. Okay, 29.34. 31. All right, let me just divide that out. 2934.31 divided by 33.24 equals, all right, it's 88. The gold to silver ratio, John, right now is 88.28 to 1, according to my calculation. So, all right. So this is Mike Maloney. He says, let me see what he said just before that. Oh, I should read the paragraph before it. It's always a scary ride when an investment plunges. And when the stock markets begin to crash, they tend to take precious metals along with them for a little while. But to me, it's just a gift. In fact, when the stock market crashed in 2008, I more than doubled my position in precious metals. I didn't catch the absolute bottom, but I made a whole bunch of buys near it. The stock market fell further, but by that time, gold was up 30%. And this is the point, John. But I didn't buy gold in the crash of '08. I bought silver. All right, so when is silver golden? I rely on the gold to silver ratio to tell me what to do, and I dutifully obey. What is the gold to silver ratio? It's simply how many ounces of silver it takes to buy 1 ounce of gold. It's easy to calculate. Just take the price of an ounce of gold and divide it by the price of an ounce of silver, which I just did. So if gold is trading at a number, you divide it and you get the ratio, which I just did. I won't read his example. I just used the real number. I divided the gold price of $29.34 by the silver price of $33.24, and it came up with 88 to 1. So the gold to silver ratio right now is 88. It's 88. The gold to silver ratio right now is 88. All right. This is what I typed up and I put up. I'll try to do it again. I don't know where it is. When the gold to silver ratio, the gold silver ratio, I'm going to leave the 2 out. When the gold silver ratio is under 50, it suggests gold is undervalued compared to silver. So 50, gold is undervalued. I buy only gold. When the gold silver ratio is between 50 and 60, I split my money to buy. I buy 75% of my currency on gold and 25% on silver. When the gold silver ratio is between 60 and 70, I go 50-50. And he's talking about making new purchases. When the ratio is between 70 and 80, I go 75% silver and 25% gold. And when the gold silver ratio is over 80, I buy only silver. That's where it is today. But this gold silver ratio, for the longest time, was 120. And then it went down. And recently it's been 90, but here it is at 88. So during the COVID crash, I wanted to buy gold so badly, but I just couldn't let myself. I learned that buying or selling based on emotion is the worst thing I can do. By strictly adhering to the commands given to me by the gold-silver ratio, I was able to buy silver when it was trading at less than 1/100th of gold's value, which was recently true with silver. I believe wholeheartedly that one day you will see the gold-silver ratio fall below 20. I agree with that. I think it's going to go 1-for-1. If I sell, then my silver will have outperformed gold by a factor of 5. If I decide to swap it for gold, I will get 5 times as much gold at that time than I paid for. So when is silver golden? The higher the number on the gold-silver ratio, the more golden is the opportunity in silver. That's it. That's all he wrote. I made a chart, John. I'll try to find it and put it up again. But John, it's interesting. You bring that up. There's a chart out there that I tried to find today, but gold is breaking out on the gold to S&P ratio right now. Gold is breaking out. I can't find the chart. I looked everywhere before I came on. I'll try to find it before tomorrow. But you can apply that ratio to housing. I have no idea what you paid for your house. I know what I paid for my house. And what's odd, my house apparently just sold over $4 million. I didn't benefit. But what's odd is that's basically 10x on my house. Of course, the leverage is beautiful, but I didn't benefit from it. A little bit, but not. It's so frustrating because all of the move happened, and this is how things go. You hang on, and it all happens at once. But when you rely on others, that's when you find out that you shouldn't rely on others. But basically, in the time frame of I don't know what that is, that my house went up by 10x, gold went up by 10x. So what's weird, I couldn't have gotten the leverage on the gold, but in gold terms, ounces over that period of decade and a half, I think it was 23 years, to my memory, gold, if I had traded my house for gold at that time and then traded it for gold now, roughly, I'm just being rough, it'd be the same number of ounces. So today, there's a property that I'm looking at. Whatever, it doesn't matter. But let me just divide it out roughly. It will cost, unless it's negotiated, it would cost basically 1,225 ounces of gold. So the question is, where will the price of real estate go in 5 years, 10 years? I don't know that answer. It's just, I think you have to live or buy or be comfortable where you are. And you have to realize that your real estate is always going to have value to other real estate. So if you own the best, yours will always be the best, so to speak. But what's really interesting, and I don't know the answer, it's so frustrating, is real estate a store of, if the dollar collapses, will real estate go up in dollar terms? And I think that's what's been going on the last few years. And I think it'll continue, actually, because I think, I don't know about everywhere, but I think it'll happen with farms. It'll happen in the city, in the valuable cities. I'm not sure it'll happen in Poopville, San Francisco, but it might. I don't know. I love San Francisco, but it sounds like a nightmare. But anyway, so if I had to guess, I think real estate in dollar terms is going to go up, and hold its own and all that, and it's going to be something that is valuable, particularly if it generates income. But there's another way of looking at real estate. If gold were to go, let's say in 2035, 10 years from now, they revalue gold in some price, Bretton Woods type thing. And let's say gold goes to, what is it right now? 29. Let's say it goes to 30,000 an ounce. Well, that would be 10x. Would real estate go 10x from here in dollar terms? Maybe. I really, it happened with the Weimar Republic. It happened. Anyway, I don't know the answer. If it doesn't, a house like this, the one I just mentioned, maybe in 10 years, it could be purchased for, instead of 1,225 ounces of gold, maybe in 10 years, you can buy it for 500 ounces of gold, right? So who knows? I don't know. I can't figure out if real estate trades like a bond or trades like the value it has. I don't know. I've got to think about it more. Jenny, what did I tell you about moose or the bird? Yeah, I did think about you. It was one bird. I saw one bird, and he was on the branch, and it was in as anyway. I thought of you, that he was a good guy too. He was a good guy. Missing you and Ham. I'm back. Was out for nearly a year. Wow. Were you in the wilds of Afghanistan? Thanks for coming back. I'll try to do a better job. Talk about how I screwed myself by trading MMTLP for next bridge. Oh, I'm not gonna bite. I don't think I screwed my. Why don't you tell me? I'm not going to do it, but I found the FINRA's response to the congressional letter. It runs like 30 pages. And if I had started earlier today, I was going to read it. But guys, they're putting into evidence, like all good lawyers do, what's going to hang you if you listen to this guy. That NextBridge is going to start trading eventually. Well, I guess we don't know 100%, but they're trying to. But that's what they're arguing, that it's a public company. So the short position is justified. And what these guys want to do is get you to do nothing. Even Ham said it earlier, just get the count. The best way to get the share count is if everybody moved their shares from a coupon that's worthless to real shares in NextBridge. This guy is saying something that is just like the other guy. It's just here to get you to doubt it, to make you, but whatever. It works. That's why they do it. It works. But he's another guy that I told my boss at one night we were down at the bottom line, and he had gotten one of his cigarettes out of the trophy up on the bar because he had quit smoking. But I don't know, he's having one, and I said, George, I think I said it. The problem with me, I always see the good in people. I always think people are good. And he took a puff on his cigarette. He said, I was like, I guess I shouldn't have said that. And he was a good guy. He looked at me and he said, Billy, I can't get his voice right. Billy, always be that way. You should always be that way. But I'm surprised that there's so much evil with people. This is bullshit, guys. I'll address this because this is the argument they give you. These are men who like to argue, and they take partial information and they give you a statement and then ipso facto a result. This is fraudulent. This is a lie. So he says next bridge hydrocarbons isn't shorted. Well, that's not what Congress has been told. Why would they settle with you? Settle what? Settle what? They are only going to settle short shares. So this guy is lying to you. He's trying to make you confused, and it is confusing. And I'm sorry it's confusing. That's the darkness that this guy hides in. But I'm not going to read the whole congressional letter right now because I think it would drive everybody crazy. But let me put out a few facts that you can count on. You can't short a private company. You can't short a private company. I wish I had a better computer system, and I'll get there. But I just got to think where I can. I read it the other day, but I just got to try to remember where I can find it quickly. Let me see if this is it. If you don't know where you're lying, then I shouldn't say you're lying. I just say you don't know what you're talking about. All right, let's see if it's here. So you could just be saying the wrong thing without lying. But it doesn't mean you're right. All right, let's see. It just takes me I just got to find it. All right, let's skip that, skip that, skip that, skip that, skip that, skip that. Okay, this might not be where it is. I just got to find it, and I will. Maybe it's at the very top. Well, this is the start of it. It doesn't come out and say it, but FINRA says on March 16th, 2023, I think FINRA in this case is more accurate, but this is the predicate of what they say later. And unfortunately, you have to put more than one thing together. All right, so they filed an S1. NextBridge would be an independent public reporting company. So that's the first statement they say. They move it slowly to their goal. Okay. So that's obviously not where it's written clearly enough for you. All right, let me write that in there. See if this comes up. All right. Let's see if it's here. It's unfortunately, it's going to take a second. All right. So I'll read some of this. I'm not going to read all of it. Hopefully, I'm going to be able to answer this guy's point. FINRA wrote a letter on January 31, 2024. It comes from Robert W. Cook, and it's addressed to the Honorable Ralph Norman. Thank you for the opportunity to respond on behalf of FINRA. We greatly appreciate the opportunity. FINRA's decision to halt trading was due to clearance and settlement concerns. No kidding. FINRA did not initiate the halt because there were problems with a share imbalance and counterfeit shares, or because of short positions held by hedge funds. FINRA is not aware of any data that supports social media claims of significant naked short selling or counterfeit shares in MMTLP. That can't be good for holding MMTLP, but maybe it is. I don't know. FINRA cannot perform a certified audited consolidated count of shares, and they explain why. Social media. Metamaterials predecessor Torchlight. It's a lot of work. I hope it answers your question by the time I get down here. I'm on page 8. All right, next bridge. When a company decides to engage in a corporate action that affects an unlisted security that trades only in the over-the-counter market, SEC Rule 10b-17 requires that the company submit notice of specified types of corporate actions to FINRA. FINRA reviews the submission pursuant to FINRA Rule 6490, and unless FINRA determines that a submission is deficient under Rule 6490, FINRA provides public notice of the corporate action on its website via the daily list. Broker-dealers and professional vendors historically have been the primary audience for the daily list, which contains technical terminology and information that broker-dealers need to perform tasks concerning their activities and securities. Then he talks about short selling, Reg Show, and MMTLP failures to deliver. As of December 9th, the failures to deliver in MMTLP were very low. 215,238 shares out of 165,472,241. I don't think our strongest argument is that Congress believes that, I mean, they could settle the short shares as you put it, but they'll settle 238. He goes through the request. Next bridge, MMTLP corporate action. Metamaterials distributed 165,472,241 of the outstanding shares of NextBridge common stock on a one-for-one basis to shareholders who owned MMTLP as of the close of business on December 12, 2022. Nexbridge stated that the shares were distributed to Nexbridge's transfer agent and registrar, AST, which then distributed these shares either directly to any MMTLP shareholders whose shares were directly registered with AST, or to the shareholders' bank, broker, or nominee representatives. Thus, there does not appear to be a disparity between the number of MMTLP shares the company understood to be outstanding and the number of Nexbridge shares distributed to MMTLP holders on a one-for-one basis. We understand that some investors are nonetheless concerned that their broker-dealers have not received Nexbridge shares, that the broker-dealers have not. That's not the issue. Okay, let's go down to Nexbridge. Okay, Nexbridge filed a Form S1. This is on page 15. The Honorable Ralph Norman, January 31, 2024, from Robert Cook. Nexbridge filed a Form S1 registration statement with the SEC to register the issuance of its common stock in connection with the Nexbridge / MMTLP corporate action, which became effective on November 18, 2022. According to the prospectus, Nexbridge is an independent public reporting company. The shares are publicly tradable under federal law and are widely held. However, today it is very difficult All right, let me see the settings. Is that working? Yes, it's working. All right. I don't know why it muted. All right, so let me start that over. On page 15, the Honorable Ralph Norman, January 31, 2024, written by Robert Cook, CEO of FINRA. Nexbridge filed a Form S1 registration statement with the SEC to register the issuance of its common stock in connection with the Nexbridge MMTLP corporate action, which became effective on November 18, 2022. According to the prospectus, Nexbridge is an independent public reporting company. The shares are publicly tradable under federal law and are widely held. However, today it is very difficult for Nexbridge shareholders to trade their shares because Nexbridge has not taken the necessary steps to support the development of a secondary market. Steps that its predecessor undertook with respect to the MMTLP shares on Permian. I think that's a lie about MMTLP, but whatever. We all know that Robert Cook is an honorable man, and so are all the lawyers. They're all honorable men. All right, so let's ignore the steps. Let's ignore that sentence about however. NextBridge is an independent public reporting company. The shares are publicly tradable under federal law and are widely held. However, it's very difficult. Doesn't mean they don't see it as a public company. When NextBridge registered its common stock, it stated it would not seek to make the common stock DTC eligible. NextBridge acknowledged that the absence of DTC eligibility would hamper trading. Unless NextBridge takes steps that would support trading in its common stock, trading will continue to be difficult, including trades to close out short positions. So PCB rentals, your premise is wrong according to the regulators. I mean, you're welcome to your opinion, but I think lawyers are going to go with what the lawyers have written on behalf of Robert Cook. Thus, the lack of a public market for NextBridge's common stock is the result of NextBridge's decisions, and NextBridge can rectify the challenges investors are facing by taking the appropriate steps to support the development of a secondary market. While FINRA cannot force NextBridge to take these steps, FINRA has engaged with NextBridge leadership to explain ways in which the company could support investors' ability to trade NextBridge shares. FINRA stands ready to take steps that are in line with its role in the OTC markets. So let me just read that again to you, PCP. And maybe I can hold this up here so that you can see it yourself. It is the stance of FINRA that NextBridge filed a Form S-1 registration statement, that's to register shares, with the SEC to register the issuance of its common stock in connection. I'm sorry. Let me start again. NextBridge filed a Form S-1 registration statement with the SEC to register the issuance of its common stock in connection with the NextBridge MMTLP corporate action, which became effective November 18, 2022. According to the prospectus, NextBridge is an independent public reporting company. The shares are publicly tradable under federal law and are widely held. So I'm not going to call you a liar. I'm just going to say that NextBridge, according to FINRA, according to the regulators, NextBridge has a small short position, but it's difficult to cover right now. But anyway, I think, why haven't you answered one of my questions? I just did. This guy practically urged people to get Nextbridge shares. Now he can't answer his thing. Seems confused that you can't short shares in a private company. I do. It's not practically. I don't urge. I think if people listen to you, they're crazy. You must move your shares to Nextbridge. Seems confused that you can't short shares in a private company. Well, I don't think that's even true if you find somebody to draw up a contract. But let's leave that aside. Your point is you can't short shares in public markets in a private company. That's what you're saying. Well, according to FINRA, the short position was created in MMTLP. I'll read it again to you. Nextbridge filed a Form S-1 registration statement with the SEC. This is according to Robert Cook, to register the issuance of its common stock in connection with the Nextbridge MMTLP corporate action, which became effective November of 22. According to the prospectus, Nextbridge is an independent public reporting company. The shares are publicly tradable under federal law, and they are widely held. So I don't really know your point. William, I see finger volume is picking up. I hope it stays below 150 over the next few weeks. Have some extra money. We'll be able to bet. Wow, 10,000 shares. You're getting up into whale territory. Ricky, I'm going to put this up here so you can read it. But, you might have to pause the live to read it. Let me put the letter up there. And then let me go to the top. I mean, it's not the only place they say it. I just can't remember where else to look, but I'll find it. This is the letter. So these guys are, my opinion, and this guy, PCB Reynolds, is one of them. They're paid. They're paid to come in here and confuse you. It's a tragedy because if Ann Wagner doesn't want a share count, FINRA says they can't do it, and they admit in this letter, I didn't read it to you, but out of Europe, the shares these guys sell, there's no record. They don't keep track. So, and FINRA can't regulate them. So it's a bunch of passing in the buck. So liars like this guy can come and confuse you. Then he calls me confused and I can't find it. Well, I'm sorry it took a while for me to find in a 31-page letter the specific reference to where FINRA points out that Nextbridge submitted a registration statement via prospectus to the SEC, and the SEC approved it. So according to FINRA, Robert Cook, President and Chief Executive Officer, Nextbridge is a publicly traded company. Who's confused? But they want you to confused because there's there's 165 million shares, but what's hard for you to understand because you didn't do it, but most people bought their shares through a broker dealer, and you never got your shares. You just get an entry, and this is where these guys live. This is the space they live in. They sell stock that doesn't exist. You buy it because you put up cash, and then their prime broker, their money, they go through these shady market makers, but their prime broker will talk to your broker dealer. It'll just be electronic. There might be a half-assed attempt on the part of your broker dealer to collect your shares, but their prime broker will lie if asked. Oh, it's coming. They'll lie. Oh, we're delivering it. We have it. But then as time goes by, they let it go. Why? Because these guys and his friends represent a lot of commission. More importantly, they make a lot of money lending out the stock. Look, if you can make, I don't know, if you can charge $100 a month lending out 1,000 shares, I'm making it up, 1,000 shares, why not lend out 100,000 shares, even if you don't have them? This is the reality on Wall Street right now. So anyway, there's 165 million shares, but probably only the whales, only some people, probably of that 165 million shares, I'm going to guess 135 million, it's probably more than that, are all in street name. They're all in street name. So they're in the name of E-Trade, they're in the name of TradeStation, they're in the name of Morgan Stanley, they're in the name of Bank of America. They're in street name for the benefit of you. So who knows about those shares? Not the regulators, not the issuer, not the prime broker on the other side, not the other broker dealers. They don't know. The only one that knows that you're supposed to have shares is your broker dealer. But your broker dealer, because of the trades that PCB Reynolds does, your broker dealer has put in their clients' accounts, your accounts, 20 times as many shares as they have received in street name. So, I mean, if you use an example, Fidelity might have a certificate of NextBridge that was distributed fairly for 5 million shares. But Fidelity might have in Fidelity's books for its clients 50 million shares. And the reason PCB Reynolds is here is to get you not to request delivery of your shares from Fidelity. Because the best thing for PCB and all those people on Twitter, they're paid and they'll get a bounty if they get away with this. They're making money in other trades. They don't want anyone, Ralph Norman or Robert Cook or Adina Friedman or Maria Bartiromo, to understand what's going on. It's not that hard, but the easiest way they can keep it confused is to come here and FUD you. And the biggest thing is there's no share count. We've been going on 800 days and there's no share count. So PCB Reynolds has been very effective. He's earned his bounty. But what would fix it? You don't have to, you know what's weird? You don't have to have all 165 million shares transferred. You might, if the brokerage firms collude, you might have to. But as of now, we don't know that the brokerage firms are all rotten. PCB Reynolds is rotten, and his other friends are rotten, and the market makers are rotten, and the stock loan desk might have one or two people, and there's some rotten eggs, but the money flows, the commission gets printed daily, the weekly checks get mailed out or delivered to the broker's desks, and life goes on. Every now and then they got to make a payoff, but let's go do more business. Let's go get more business. Well, let's focus, and maybe that's what I should try to do, is focus solely on people at Fidelity. For those of you who own MMTLP at Fidelity, this is what PCB Rentals wants to stop. I think Fidelity, Ameritrade, it looks pretty clear that TradeStation is in trouble. But I think the ones that are in trouble are Fidelity and Ameritrade. There's almost certainly a handful of others, but the majority of the broker dealers are not in trouble intentionally. They may have some reconciliation to do, and they have the same problem that FINRA just described. They can't go out in the market and buy back shares, but if they had a chance, they would, because they're not corrupt like PCB Rentals. But I think Fidelity's in trouble. So just to narrow it down to Fidelity, all you would need is those 5 million shares to be asked for. And it's probably what, if everybody has, I don't know, what's the average everybody has? Let's use me as an average. 4,289 or something like that. Let's just use me as an average. So there's 5 million shares that Fidelity has in street name. Let's say I'm the average. So I'm 4,629, I think, something like that. No, I think it's 3. Anyway, let's use that number. So there's a little over 1,000 shareholders at Fidelity who, if they asked for those shares, there's probably 10,000 shareholders at Fidelity, but if 1,000 shareholders asked for delivery of their shares, Fidelity runs out of their street name. And then everything comes to light. Then lawyers have proof. Journalists start going, hey, wait a minute. What's going on at Fidelity? You have proof. So that's what PCB doesn't want you to do. He doesn't want you to ask for your shares. And it's not true. They're only, he talks about settle. They're only going to settle short shares. That's not true. That's not the issue. It's not the issue. The issue is, what did those short shares cost you? Opportunity cost, they'll settle with everybody. racketeering and securities crimes, civil and criminal. They'll settle with everybody. They'll settle with everybody. And if you get, and this is the thing about PCB and his ilk, they'll move their argument around and they'll forget about the arguments they used to make. But they used to talk about short squeeze and getting 2 days trading. That's where the payouts could come, is the short squeeze argument. I'm not optimistic, but that'll go to everybody. If FINRA committed crimes, that'll be massive. That'll go to everybody. If Fidelity committed crimes, that'll be massive. That'll go to everybody. But what if FINRA's arguments and the SEC arguments and the delay that PCP does, what if those take hold and they rule 10 years from now? Because they'll drag it out forever. And you're in this crap that PCB wants you to hang on to, which literally is a wet noodle. You're not going to get anything. And look, it's tough. I'm not saying that it's going to be easy, but NextBridge could create value that not only gets your money back, but gets you great rates of return. Maybe. I mean, it's these guys, they'll do anything. I think they're protected by the view that the rest of us aren't human. That's what I think. But anyway. Oh, sorry, that 150. Sorry, Bill. I think it'll stay under 150 for a while. I don't think it's going to break through. If it does break through, I think they'll get it back down. So I think you'll be all right. I think you're going to have you might have, I don't know, I'm making a prediction, but I think you'll have until April 15 to buy it at or below 150. That's what I think. Why? Because I think those warrants give the criminals like this guy the ability to go sell stock that doesn't exist, because they can say they have those warrants to protect the risk for the prime broker. So I think 150 is going to be, I'm not trying to be negative. I just think 150 is going to be a hell of a barrier. Now, it doesn't mean it doesn't run up and you can trade it, but I think they'll drive it back down under 150. That's just my opinion. That's what it looks like. Okay, so I forget, Ricky, which firm you're with. Did you say Fidelity or did you say Ameritrade? I can't remember. Let me just see what you said. I tried to move my shares again a couple of months ago. So you did call ATS. Unfortunately, he's not the one screwing you. That's American Stock Transfer, I think. I think that's what you mean. Anyway, the transfer agent is helping you. And checked and came back and said at this time they weren't taking any transfership. So maybe ATS doesn't mean the transfer agent. Maybe it means somebody else. Oh, Fidelity. Um, Drew, that's not what I said. That's not what I said, but I'll come back to that. I don't know. Why are people so obtuse? Why are you so obtuse? Is it how you grew up? Were you trained to be obtuse? You get a kick out of it? All right. So you did call? So you did call the transfer agent, and he said that they weren't taking any transfer. So, Ricky, here's my opinion, and I don't know. I would ask Fidelity to put it in writing, and I might sit down and put it in writing to your broker. I think Fidelity ran out of shares to give you. I think I'm not being mean, but I think you waited too long. That's at least the possible answer for what happened here. I think Fidelity is one of the companies in trouble. To my knowledge, but it's a year ago, so I don't know. But I think Morgan Stanley is still fulfilling requests. I think you might have waited too long at Nextbridge. At Fidelity. So what are your options? I would write. I'd become a squeaky wheel. Fidelity might have powers to go borrow from one of the brokerage firms that has plenty of shares. I would do it politely, though. Odds are that the people you talk to at Fidelity, most of them have no clue. The other thing you could do is try to transfer the position or transfer your account. I think it's going to run into the same dead end. I hope you understand what I'm describing. Fidelity may have sold 25 million shares to its clients. In other words, it behaved as a broker so that this guy could sell shares he didn't own, and Fidelity never asked for delivery. And Fidelity may be on the stock loan side too. I don't know what they were. They may be part of it. I don't know. We don't have all the information. But I believe Fidelity is one of the companies in massive trouble, from what I hear. It's speculation. No lawyer, no judge would take these words as gospel truth. But what I think happened with Fidelity is they sold 25 million shares. So you are one of the shareholders that trusts your account. And why not? You have no choice. Why not? Every time you sell one of those black and white entries, 2 days later, there's a black and white entry that says cash, and you can transfer the money out. So why not trust it? But in this case, it stopped trading. In this case, all the rigmarole. I think Fidelity may have issued it might have had a certificate, street name, for 6 million shares. They may have issued all those shares to the transfer agent, and there may no longer be any shares available. What's probably more likely, Ricky, is they just stopped doing it because they knew they were going to run out. So like a hotel or a plane that sells out, they save at least one seat. They save at least one room. Maybe you can get Fidelity to, you just got to be persistent, but maybe Fidelity can peel off a little bit more to get it to you. All right. So what happens if you can't get it? Well, I don't think it's hopeless. Right now, there's a lawsuit with MMAT that could make things happen. but it could take forever. And it's not MMTLP. But I think it's true that opportunity cost, racketeering, fraud on the part of FINRA, corruption and criminal activity, Fidelity itself might get into a lot of trouble. So I think there are ways where I can see a world where Fidelity might call you and buy your MMTLP back from you. So it's not hopeless. And then you have cash. And then you can maybe go buy NextBridge shares when it's trading if you want to be in it. It's not hopeless. I just personally don't understand why you wouldn't want to avail yourselves of two ways of making money. Really, the only way of making money that's outside of the legal regulatory system, which is owning NextBridge. But it's going to be a rough road to hoe anyway. So, Ricky, please don't berate yourself. Just try to put pressure on Fidelity, not the transfer agent, Fidelity, to perform. And if it doesn't work, it doesn't work. Look, I have my NextBridge shares, but I no longer believe there's going to be I think these guys like PCP have been very effective at their job. They bought a lot of time. And I no longer think there's going to be a massive payday anyway. So I do think NextBridge has the team and the formula and the motivation to make a lot of money. And I think I don't think oil and gas necessarily is going to go straight up. So anyway, all is not lost, but man, I wish you had gotten your shares. So the question is, the warrants aren't going to blast finger. No, I didn't say that. The warrants, you're mixing warrants anyway because you're intentionally trying to confuse everybody. Finger Motion is issuing warrants which convert for 1 share for every 10 shares you have. He thinks those will catch him out. So you're just being a jerk. I'm not going to even answer. Yeah, it's called Equinity. They're not the ones that are going to get it done. You have to call Fidelity. It may not be too late. I doubt they've issued all the shares. So if you're knowledgeable, persistent, I think they'll do it. That's what I would do. I would open a notebook. I'm terrible at it, but I'd write down tomorrow. I'd call, make a couple of notes, call the next day, make a couple of notes, call the next day, make a couple of notes. I'd call every day for the next 3 weeks. It's not American stock transfer you should call. Fidelity might tell them we're not going to do it anymore. And maybe that's the case. Maybe it's too late. But the person you need to call is Fidelity. You have to call Fidelity. And if you don't want to talk to your broker because you're embarrassed, which that's fine, call in on the service line, customer service, and just have a beer or a cup of coffee and put it on speaker when they answer. Just say, hey, look, I'd like to transfer my NextBridge shares to the transfer agent. Well, we looked, we can't, hold on. Well, we looked and we're not accepting that right now. Well, how can that be? How can you not accept it? I mean, you know, according to the corporate action, which you have in front of you, I'm entitled to it. And anyway, I wouldn't lose my temper. I've done that, lose the temper. It doesn't work. So I just be polite, just persistent, and call. I know it's terrible. Nobody's been in anything like this. Nobody's been in anything. I've kind of accepted now that, you know, my for anything that really matters, which is trading or, you know, paying your truck payment, or, you know, buying a new pony, or anything that matters. I just assume I'm never going to see any money from my NextBridge investment. But I'm tired right now. I read it the other day. You can go to the NextBridge website. This guy, Greg McCabe, I think is not going to go down without a fight. He's fighting hard. I think he's honest. I've spoken to him. I think he's doing everything to make sure shareholders in NextBridge get out of this not only whole, but with a viable company and profit. But that's not going to extend to MMTLP. Ricky, when I first started projecting this, I thought something would happen right away. So anything good that would have happened to NextBridge, let's say the shares were worth $30, I think that would have been extrapolated to the value of MMTLP. But now 800 days have gone by, and they're going to argue that MMTLP, NextBridge, isn't really worth anything during those 800 days. And then if NextBridge, by the way, it looks from the last update, it looks like NextBridge has a fight on its hands. So I don't expect anything soon or sudden with the Southern Louisiana wells. But let's say at some point they do make $5 of value per share out of Southern Louisiana. I guarantee you the lawyers on the side of the liars, and the liars who are lawyers, and the liars who come on here, they're all liars. Isn't the devil a liar? I can't remember. Somebody told me that the devil always lies. Yeah, it was the priest talked about that. The 40 days that Christ went to the desert, everything the devil said to Christ was a lie. And he said that's because that's all he can do is lie. That's these guys. They're just liars. Anyway, they'll argue if value now comes from anything else, including, in my opinion, Oro Grande. I think they have it now that the Oro Grande expired, but if it, which I don't agree with, but that's what they'll argue, their lawyers, the bad guys' lawyers. And then if they get it back, they'll say, oh, well, it doesn't matter. That's after the lease expired. So they're doing everything. They're thinking ahead. They're lying ahead. They're hiring people to create FUD. They're doing everything. And by the way, like any good lawyers, even if they are liars, they're entering it into the record. Because remember, the only thing that matters in the hearing is the record. So all this stuff, you get these liars like PCB come here and tell you I'm confused and why isn't he answering my questions and blah, 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 blah. He's going to be nowhere to be found. Nothing he's telling you or promising you or representing to you is going to be in the record. Nothing I'm saying is either, by the way, but I do think that if you take the action to go get your shares, there's a record of that. That can be put in the record. Anyway, Ricky, it is a nightmare. And the magnitude of it, it's breathtaking. It's breathtaking. It's absolutely breathtaking. Hey, Johnny, you're welcome. Thank you. Sorry to go. There's, I don't think it's funny. You laughing? Yeah, I remember. I've met a lot of people, but I remember that with the pizza. I remember that. I barely remember, and it's just shocking to me. 3 years have gone by. It's just incredible. So, Ricky, thank you for being here, and I hope we meet again. And it's a bit embarrassing that we can't have any more success, but I'm just like you. I'm out here. If I were still working at a firm, and I would be trying to help you out with a trade here or there, or an IPO maybe, but everything's changed. But I think if I spoke up, I'd be fired. So they're very powerful, but I think at the end of the day, one punch to the nose or one arrest or that's why they're here fighting so hard. One brokerage firm gets in trouble for NextBridge, and the payouts can be huge, and it doesn't matter as long as you were abused and defrauded, you'll get that payout. So there's a lot of hope. I'm not, hope is the wrong word. There's a lot of possibilities, but I just think we can't just expect somebody to rescue us. That's all. Rick from Tennessee. Yeah, I remember Tennessee. I remember that, Rick. I do remember that. Do you think with MMTLP, certain brokers are more liable than you? Yes, I do. I don't know that will matter. This is the thing. Once it gets into the legal world, it's just different. There's no squeezes in the legal world, but there will be settlements. So there's a lot of brokers. I think NextBridge will start trading because they're trying to get 40 million shares sold through Roth Capital. Of course, the criminals are doing everything they can interfere, make sure that the shares don't have an asset. But I assume that eventually they'll get that done. But it'll be at a low price. And Drew, that's when the criminals win. Hey, well, the offering was at a low price. And then there goes the massive big numbers of a settlement. But if you have your shares of NextBridge, and the company gets, let's say, $80 million, $40 million. See how low I think it'll go, but they get it. You can have something worthwhile. But once the stock is trading, company, and that's what they're buying time for. They can go buy the shares. So a lot of the companies that might have exposure, they might have small exposure. They'll go buy the shares in the open market, put it on the error account, and take care of it. A company like Fidelity, and this goes to Ricky's situation. If Nextbridge starts trading, there will be probably down the road an avenue that Ricky can go to Fidelity, and it might be 2 years, might be a year and a half, might be next year. And Ricky can call and they take care of it. Why? Because Fidelity goes out and buys shares of Nextbridge in the open market. Well, you can see what's going on. That could start a short squeeze that increases the price of Nextbridge, and it might allow Nextbridge to raise more money. I mean, there's a dynamism that can start happening, but the criminals will be shorting, and so Greg McCabe is going to have to be talented, and I think he is talented. I think he knows what he's doing, and I stand ready to help Greg McCabe. But I don't know if Schwab's one of the ones that's in trouble. I think there's a lot of deniability on Wall Street. So a Schwab prime broker might be separate from a Schwab broker dealer, and they're probably listed under different LLCs or different corporations. So the settlement might come out of the prime brokerage rather than the broker. I mean, the whole thing, I'm telling you, the lawyers are it's all going to be a nightmare. The settlement, though, maybe there's liability, but there's also a desire to settle. And I think it's unlikely that Wes Christensen won't settle. It's just a question at what price, and it'll come anyway. I'm gonna go. My head is not working. I'm gonna go. I guess 8 o'clock. I guess I'll go get something to eat, and I'll talk to you tomorrow. I don't know right now how to do better. I'm gonna get a better computer, better setup. I just think I have to go to short presentations and maybe interviews, but thank you for tolerating my weak performance, and we'll catch you later. Good night.